So let's say I wanted to create a box, right?
Mhm.
Um, Now for settings, you're gonna have that middle line. That marks your 50%. So if you want to add that, you'll click this and you can make it whatever color you want. I don't know why
Mhm.
mine's purple. I just never changed it. Now what I'll do is you go in the text box, type in bearish FVG. Awesome. What you'll do from there is you click templates, save drawing template as, and then I would type in bearish FVG. I already have one, so I'm not going to save it. But then what that allows is you have all these right here. So like say I had this as a 15-minute bullish fair value gap. I can change it now to a bearish fair value gap.
Mm.
Just like that.
I'm trying. Okay, I see the template. Save as. Okay, and then it says bullish template. Gotcha. And how do you have that
Yep.
as like a hotkey? Like I'm assuming that's like a little hot box right there. How do you add that
This
in
right
there?
here.
Yeah.
So as long as you're on your laptop, it'll be easier to do. But you have all
Uh-huh.
these over here.
Yeah.
So you'll click on that light on that little arrow that's right there,
Uh-huh.
and then you'll star it.
Got you.
So
Got you.
once
Got you.
it
Got
if you that makes it your favorite, that way when it'll put it all right here for you.
you. Mm-hmm.
Okay, guys. So let's just go ahead. Oh, he's in here. Initials here. Hey, I was wondering if you would show. Let's get going then. We got everyone. We got everyone here. Um, so I do want to we're just going to kind of start with some basic stuff tonight. Mike, you've been doing this for a while. So you're going to kind of already know most of this stuff here. Um, but these guys, I'm kind of starting from square one with them, just trying to teach them the very basic stuff, and then we're going to progress through everything. Kind of how Humble taught me it, but I'm going to do it my way. So tonight we're going to talk about inverted fair value gaps and inverted fair value gaps. Um, do tell me if, and you can type it in the chat if you do. Who here doesn't know what a fair value gap is, or has an understanding of it but may need to learn more? I know, Descendant, you're starting from square one, so I know we're gonna have to start from the beginning on that. What about you, Embodiment?
Fair value gaps. Yeah, I got plenty of knowledge on it actually.
Okay, so I'm gonna just spend a quick second on it just for Descendant real quick. That way he can kind of see what they are considered. Now, Descendant, so a fair value gap is going to be, it's typically like these big candles right here, right? And so what makes it a fair value gap though is you see this wick that's right here on the first candle and this wick that's right here on the third candle. Then you have this space in between. That's caused by a large order of either buys or sells typically. So it creates this gap in between. And there's actually liquidity in this area. And so the market will trace back into it sometimes, as you can see right here, to collect some of that liquidity before it continues on. Now, sometimes it's already collected the liquidity through it or it's weak. And so that's when you'll have candles that run straight through it. So like, let's see if I can find one. Um, like right here. And these are ones that are a pain in my butt because they'll fake you out of positions. The market ran straight through this fair value gap only to continue to the upside. So it knocked someone out of their position right there. Then you got like one that's like right here. The market came up, taking external liquidity, came back into it. And so as you can see, I'm having the bottom of the candle touching the top of this wick and the top of this box touching the bottom of the next candle. It's that space that's in between. You can either say or type it in the chat if you understand what I'm talking about, just so I know that you got a basic understanding of this, or if you're
Yeah,
following along for me.
I'm following
Okay,
on
cool.
this.
Okay, bet. So yeah, so as you can see, the market created this fair value gap, came back up, tapped into it, and then it continued up to the upside. So, and I told you earlier today when we were talking, I was like, you have to pick and choose, and it comes with time, which fair value gaps you use. Because let's say you entered on this fair value gap right here, the market came down and closed through it. So you would have been taken out of your position, only for it to continue to the upside. And so you would have made the correct trade. You just entered in the wrong place. And so typically you got to find the correct places, the correct fair value gaps to use. Which is why I was telling you, it just requires patience and you sitting there and watching it. And another thing I'll teach you later on is order blocks, but I would have waited for the market to come back and tap into this fair value gap due to the fact that there's an order block right here. And I'll explain it to you what it is when we get to that point, you and I. But this is where I would have waited for right here. I would have waited for it to tap into this bullish fair value gap, considering the fact that it has an order block directly under it. And that gives me two confluences to the upside. And if you look close enough to it, you will see this wick wicked into this order block before continuing to the upside. So there's two confluences right there into the direction I want the market to go in. So that's why I'd sit there and wait. Because if you sit here and just take this one, you only have one confluence right here. It's a lower probability trade that plays out in your favor. Whereas if you played this one down here,
I was gonna say,
you
how
said
many
what?
confluence do you need for you?
I like two. I like a minimum of two. I prefer three. If you can find three confluences, that's even a better situation for you. So, like talking like, say you have what?
Mm-hmm. To use OTE for that like little confluence right there. I mean, like that little black handle and that high right there. I mean, it depends if you want to consider that.
Well, so this is all-time high. So yeah, I'd be using OTE to figure out targets and stuff like that in this situation, just because there's no prediction or there's no highs up here for the market to target, you know. So you're going off of that stuff in that kind of situation. So like when I say the three confluences, sometimes you'll be in an area where you have an inverted bullish fair value gap on top of a bullish fair value gap on top of a bullish order block. That's a beautiful setup right there. Those are three confluences into one direction. The market's going to have a higher probability of taking that. Now, then, of course, we have the exact same thing. And it was in the videos I showed you, the photo I showed you earlier, Descendant, as well. Bearish or fair value gaps. So a bearish fair value gap is, like I said, it's the first candle, the wick right here, the third candle, the wick right here, and it's the gap that's in between. So there's that gap right there, and that's going to be your bearish fair value gap. So you go in there and mark it, and look at this. So you can see, and you could have taken an entrance here. The market came down, it swept this low, it swept all this liquidity right here, right? What happened next? The market came back up, tapped into this bearish fair value gap, respected it. You see there's a beautiful wick right there, and then it continued to the downside. So we wait for a low to be swept, which happened here. Then we add from that low that was getting swept, we look for a fair value gap. And then we wait for that fair value gap to get tapped back into and respected. And that's where we take our entrance. And then we target lows going down or highs going up. The market likes to take those highs. The market likes to take those lows. That's what we want to aim for, you know.
Question, Lee.
Now, yes.
So, but you would have felt more confident going into that trade if you would have had either, you know, an order block or inverse bullish for value gap on top of just that one bearish for value gap, correct?
Are you talking about here or up here?
Up top, yeah. Just you would have been more confident having another confluence before going.
There's multiple confluences here, which is what I would love. So the first one is we swept the low. We swept all this liquidity. It's right here. So the market came down. It took all this liquidity. As it came down, it created this bearish fair value gap. Now I'm gonna show y'all some things that I don't want y'all to worry about yet, unless you already know it. But what do we have here? We have 3 green candles followed by 3 black candles. What are these green candles considered? A bearish order block. Yes, sir. So that's a bearish order block. There's 2 confluences already right there, but there's a third one as well, and I'm about to show you that. And the beautiful thing is you have this volume imbalance.
What about the inverse fair value gap right there in the order block? Is that not considerable?
I mean, I actually missed that, and I'm happy you pointed that out because there's 4 confluences there. So that's literally like you couldn't ask for anything better. So that's the market telling you just to take this. Like literally, like if you don't, it's just a sad day for you. So yeah, you got a bearish inverted fair value gap. You got a bearish fair value gap. You got a volume imbalance. And then you have a bearish order block. And those lows were swept. And the fair value gap was respected. So, I mean, like you have all those confluences right there. I would take that trade in a heartbeat without any hesitation. And even if like you screwed up and were too scared to pull the trigger, you could have entered here on this next trade. Or you can wait. You could have waited and entered here again. So there's one entrance. There's another entrance. And then what are you doing from there? You're targeting the next low. And then you can target this next low, which gets swept a little bit later on. And then, I mean, what time is that? That's at 3:50. So, I mean, you could have taken it. You don't know how far it's going to go. And so that's why you have to learn STDVs and OTs, which I'll show you guys later on. We're just getting down the basics. But you could have taken it all the way to here because the market closed at 4 o'clock right here. So you could have taken a partial here, a partial here. I would have taken a partial here because of volume imbalance. As you can see, it tapped into that volume imbalance and came back up first before coming back down. So I'd do a partial here, a partial here, and then like take profit probably around this area because I guarantee if I were to draw it out from this high to this low, this would be a sweet spot you'd want to cap out at. But the thing is, I tell you guys this is like, don't get too greedy. Don't think the market's just going to come and wipe all this all the way down to here because you don't know that. It could have easily just stopped here and then reversed. So like a lot of people is they'll take an entrance, and this is why it's good with minis or micros, is you can buy 10 micros and then you could take a partial at this low. Or you could take it here, since you entered up here. You could take a partial here, move your stop loss into profit, and then you could take another partial here, and then another partial here. And then if you start to see the market reverse, then you can just close out your position. And the way you know it's going to reverse, if it stops making higher highs or lower lows. Which, I mean, I probably would have gotten out seeing this right here the moment I saw this high get taken. But me personally, I'm the kind of person that will do 2 to 3 partials and then I'm out. Like I don't care to risk anything more than that. Unless I really think the market's gonna move. What's up?
So for your order blocks, right? So I ran into so many different order block videos. What's the criteria one more time for order blocks?
Okay, so yeah, you're gonna watch if you don't. That's why I tell people not to watch YouTube videos, because one person's gonna tell you one thing and another person's gonna tell you another thing. Like if you go and watch breaker blocks, you're gonna learn 16 different forms of breaker blocks.
Man,
yeah. And it's just I don't and I talk to Humble about this because he's the one I listen to in anything, and if I have a question, I'm just gonna come to him about it because obviously what he's taught me works. With an order block, typically, like, so you want it to be, it can be like, for a bearish one, it can be 1, 2, 3, 4, 5, however many green candles. I mean, preferably, I'm more focused on 1 to 2 green candles, followed by 2 or more black candles. So, like in this situation right here, and typically an order block, you're going to see it. It's going to be the market's moving one way. All of a sudden, you have this huge fake out the other direction, followed by a huge movement the other way. So that's like what I consider an order block. So, like, you have this one right here, this big black candle, because the market is trying to move up, comes back down, it slams down, and then all of a sudden blows to the upside. So you got this bullish order block that's right here. And then, so that's one I would use. And then you see you got these 2 green candles right here. That's a bearish one that I would use. You could use this green one right here for bearish because there's 2 black candles following that. You could use this green one for bearish because there's 2 black candles following that. You could use these 3 because then it's followed by 3.
Oh, that makes more sense now.
But typically I try to keep it like 2 before before you see the huge movement the other direction.
Gotcha.
Because I mean, like, what were you about to say?
I was gonna say, what's your idea? Like, all right, based off going back to the fair value gaps, because I don't want to confuse people. You said you want to stick with the fair value gaps. What would be your ideal fair value gap to take entry at, and what's your entry criteria? I know you have 2 confluences. What would that be like? Boom! Oh, that's a good entry right then and there.
Well, so I'm just, like I said, it's not like I'm just going to pick any fair value gap. I'm going to sit there and watch how the market responds to one of them when it touches it. But the fair value gaps I'm more typically interested in are the ones, like I said, that have multiple confluences that surround them. I'm not really focused on like any other fair value gap besides that.
Gotcha.
Yeah, so like I don't just take any fair value gap, and that's where a lot of people mess up with ICT. Is they'll be like, ooh, fair value gap, I'm gonna enter right here, and then they get slammed out of their position. I will sit there and wait, and I'll miss trades until it does what I want it to do, or I see what I want it to do. Because you got this order block right here, and eventually it does get pushed through. But you see the market came back up, came back down, tapped into it, continued to the upside. What happened here? Market came back down again into it, went to the upside. Market came back down into it, went to the upside until finally it closed through it.
Got it.
But on top of that, though, like I said, you got this here. That's a bullish fair value gap. So 2 confluences that run into each other. So that's what I'm looking for, typically an order block and a bullish fair value gap, or a bullish fair value gap and an inverted bullish fair value gap, or 2 order blocks, or an inverted and a regular one. I just want to see multiple confluences line up with each other.
Got it. And I mean, and you take market orders, correct? Or
Yeah, I don't do limit. Limit
Oh.
orders give you a higher chance for failure. And the reason for that is because you're forced to enter a trade regardless of what happens. I like to see the market tap into that fair value gap, and I want to see how the market responds to it. Because like let me see if I can find a good example for you. Yeah, that's a beautiful example, actually. Tell me why that's gorgeous. Anyone?
Let me see.
Look at the bodies of the candle.
They're all wicks. I'll say that. Would that consider a confluence for you?
None of the candles closed into it.
That's
Not
true.
one candle closed in it. I love that. That was beautiful. I will not complain with that. That's a strong fair value gap right there.
Well,
After you see this rejection of wicks, where will you have took this trade? Inside where you've highlighted or outside?
So, oh, whoa, they changed the settings on TradingView. I do not like that. Oh, okay, good. So if I saw this happening, my entrance would be right here. My stop loss would be typically under the first candle or the next candle.
Mm,
So
Okay.
I would, and then sometimes it depends on really what you're feeling. Some people will risk up to $400, but you don't need to do that. I would risk up maybe to 100, or I'd go down to maybe right here. So underneath this wick right here. So it's a risk of 150. And then if you got out up at the top, that's $1,100 right there. You risked 145 bucks and made 1,100 on one contract. Even if you took it to this top right here, that's 615 bucks. And you risked 145. And then some people really, they keep it like $5 below. So if you kept it $5 below, you risked 100 bucks and you made 600. So it's a 1 to 6 RR. And then up here at the top, if you got here up here at the top, that's a 1 to 11 RR. But I'll enter at the top of a bullish fair value gap, and then on a bearish one,
Okay.
I'll enter at the bottom of it with the stop loss above it.
Can you use
So-
one of those long positions to show us exactly what you mean by that?
Yeah.
If you know what I mean, that tool.
Oh yeah, I forget where those are. I've never used one of those.
It's right there, top. There you go.
Oh wow, right in front of my face. So let's see what this does. So when I've seen videos of this, when people draw these up, does it automatically enter the trades for them once it touches it? Or are they just drawing that up to make it look pretty?
Now for limit orders, right? Because I take some limit orders. I ain't gonna lie.
Yeah.
It does. If it reaches to that point, yes, it will automatically set it up completely automated, basically.
Let's see, 418.50. 413.50. That's $5 below it. There you go.
Nice.
I told you it was 11. You not believe me?
Nice.
I mean, that's a good trade right there. Like, and that's if you got out the top. I don't know if we would have. Oh, well, that would have kind of worked out actually.
So, one last question.
Yes.
You wanna see price come inside of the fair value gap and reject, right?
Yes.
Also, that's what gives you confidence to enter.
Yes. So when I'm looking at a trade, we see this fair value gap that's right here,
Mm,
right? I want to see it. It's better if the candles aren't closing into it. So
okay.
so we see it wick into it, but the candles, what matters is where the candles close, where the body of the
Okay.
candle is. We want to focus on where the body of the candle is.
Mm.
So it wicking down into it, but coming back up and closing outside of that fair value gap, that's a strong fair value gap. That's a better probability trade right there in itself. And then, like what I was telling you earlier, embodiment, you got that inversion right here that you could play into it as well. But that's what I want to see right there. That's something that would make me want to enter a trade. Now, let me see if I can find another example of something that I wouldn't be too crazy to enter. And I wouldn't want to enter something like this anyways, because it's so choppy. I just wouldn't really trust that. But when you start to see better, clear direction, that's a better opportunity for you. And even if you miss this opportunity because you weren't quite ready yet, you had another opportunity right here as well. You wouldn't have made as much money, but it gives you another chance. Now, I would still trust this right here. Why? Because even though the body's closing into it, it's not closing past 50%. If the candle closes past 50%, what did I say earlier? That there's a high probability that it's going to close completely through the candle if it closes past 50%. And so I would still trust that, because not only do you see it wick off the 50% mark right here, I mean, it stayed above the 50% line. So I would trust something like that. Now, I'm trying to find one that I wouldn't be crazy about to take, because I just don't know if I'll see one.
Do you have a daily bias league?
Yeah, I'll set a daily bias, but I don't won't marry it.
You won't marry it. That's good. That's the only thing I liked about Humble's thing about it. Honestly, don't marry a bias.
No, yeah, I won't. If the market can switch up on you completely, like Friday, I was bearish for the market to go a whole lot further down than it did. But I missed I missed an inefficiency, because once it tapped into it, which was this volume balance, it balanced the price below. And therefore, it meant the market didn't need to go down any further. It was an auto rebalance of price. So once I realized that, that's when my verdict became bullish through the rest of the day. And I took it to these equal highs that were at 412, 23, 412. Dude, I can't find a fair value gap. I can find the good ones that I like, but I can't find one that just I don't trust. That's another good fair value gap right here too. You could take it to this high right here, because those are the relative highs, this to under this one. So that'd be a beautiful trade right there. Boom. And then it sweeps those relative highs. And it looks like it went up further. Oh. Did it have anywhere? I think it had further room to go up. So yeah, it did. This may be one.
Let's see.
I would not have liked that. Now, why it would have played out into my favor, the fact that it closed past 50% would have made me less likely to enter there, because the body of the candles closed more than 50% through that fair value gap. And so that's why I say, y'all, you got to sit there and just watch and be patient, because you can have something like this happen only for it to continue in your direction that you want. And even if you miss that initial opportunity, the market came back down after it created another fair value gap, respected it better, and then it continued to the upside. So it would have worked out for you in the end.
What
So
about
you had
using like a little higher time frame for that little? Because you were on 1 minute, right? Do you ever like scale up to 2 minutes to see if that was a better entry overall?
so the only things I'm really using higher time frames for. So I'll start on the 4 hour of my day. And so I'm going to mark out 4 hour highs and 4 hour lows that haven't been swept yet. So you got this one here, you got this one here, one up here, one here, and one here. Those are my areas of interest, right? After that,
That's awesome.
you say what?
I said that's awesome because I never really like pay attention to that stuff actually.
Oh, you should, man, because that's typically like the session highs and session lows. So I'll draw that. I'll say 4 hour buy side liquidity. How far away is this one? That's $20 away. So I wouldn't consider those relative highs. So I would make it another 4 hour buy side liquidity. And then why do I keep going back to that box? So then I'll go here. And this is just me doing it quickly for you guys. 4 hour sell side. And some of the stuff you're learning right now, Descendant, is stuff I'm going to teach you a little later on. But at least you may pick up on some of this where you can apply it. But the main thing I want you to focus on are fair value gaps for just identifying fair value gaps for this week.
Okay.
And I'm gonna show you here in a second what inverted fair value gaps are as well, because those are the two first things I want you to learn. And then from there we'll go to order blocks, then we'll go to breaker blocks, and then I'll teach you like the unicorn model and the silver bullet model and all this other stuff.
Okay.
And then I'll teach you how to target liquidity better in the market too. After we do fair value gaps. The main thing I want you to focus on though is like I want you to be able to identify them, and then when we talk next week or when we talk into this coming week again, we'll do a live stream and I'll have you show me them. That way I see that you've picked up on it, and then we'll move on to the next thing.
Thank you, sir.
Okay. Yeah, no, of course, dude.
Thank you.
So I'm trying to think, because none of this stuff has happened yet. So I'd want to be able to use a day where it's already happened. Because you could do this one. No, I'm just going to stick to this. Okay, so these are major liquidity points, right? Buy side liquidity, sell side liquidity that we can focus on. What does this go to? 384. So that's another one you can do. Now, from there, I'm going to drop down to the 15-minute so I can see a better view of this all. So this is my 4-hour window right here, if I'm correct. Yes, it is. Now, you'll start to be able to see things that you didn't initially see, right? Like right here, you got, not only is it 4-hour buy side liquidity, but it's also relative highs. Why? Well, between this 45-minute marker right here, you had this high here and this high here. Not only that, you have this high that's right here, that's $4 away. You have this high that's right here, that's $9 away. So you got relative highs right here. And then you look here, you could actually put that right there. So not only do you have these lows and these lows, so now that's 4-hour sell side liquidity plus relative lows. Same with this one. Oh my Lord, if I can type. Now, so the cool thing is if I'm going to target these relative lows, I am targeting this one. Because if the market is going to come down and wipe this here and wipe this here, Well, it's only what, $10 away from these, which then is only $8 away from this. So the market's going to come down and wipe all that right there. No hesitation. Another reason for that is because there's an inefficiency right here. There's a fair value gap that the market hasn't tapped into. So it's an inefficiency, but don't worry about that right now. But so the market would want to come down and wipe all this right here. Now, if the market's going to come up and take all this, there's a very high probability it would just wipe all these two things. It wouldn't stop there. But you could take a partial here and then you take profit there because that's all-time highs right now. And but so now you're able to kind of see things on a different perspective. Like now you see this low that's right here on the 15-minute. It's close to this low, right? So now you got more relative lows. So the market wants to continue down afterwards. Well, what can you do? You can target these relative lows next. And then look at this. Not only do you have 4-hour sell side liquidity, you got relative lows here as well. So the market's going to continue further. That would be your next target. And I mean, you can do that all the way down. I mean, there's a high probability it would take that. Ooh, see, here's another one that I hate to take. Some crap like this. Okay, don't let me use my fair value gap. I mean, bro, talk about, I'd be upset if I missed this because that's a $100 move right there. But it almost closed completely through that fair value gap. And so I'd be too scared to take that. I wouldn't be, and then I'd be mad because what happened next, it shot to the upside over $100. So in one contract would have put you at $2,000 on that in what, 1-2 minutes? No, I'm sorry. This is 15-minute candles in 30 minutes. My bad. So, but now from there, you can come down to the 5-minute and you can see things even more clearer. So the high of this one is 459.75. That's 459.50. So those aren't equal highs. The low right here is 402.25. This is 402.50. So those aren't equal. And so yeah, they would remain the same because of that. But if you wanted to just see a little bit more in depth of everything, see, and this is what I was saying, if the market were to sweep this, it would just sweep this because look at all that liquidity that's lying through there. That's just market asking for that to be taken. Like no if, and, or buts about it. And then not only do you got relative lows here, you got a bunch over here that the market would love, that would just wipe it out. So now I have potential targets lined up, right? So next thing I'm going to do is I want to see where did we close yesterday? So (3 p.m., 4:30, 7 a.m., 4 a.m., 1 a.m. You know what? This is going to be a pain in my butt. I'm going to drop to the 5-minute. Make my life a little easier. All right. So we got 12 p.m., 6 a.m. So here's midnight. So Friday at midnight, we opened at 428.50, right? 428.50. At 4 p.m., we closed at 376. So we opened higher at midnight than when we closed at 4 p.m. And so that's going to set my bias typically for the day. Now, the problem is what happened? Wait. So did I say we opened higher at midnight?
Yeah.
Let me double check that one more time. $376.75. Yeah, we opened higher, so we went up overnight. Now the issue is I would have a bullish bias for the day, but the reason I wouldn't is because what happened after midnight, we took sell side. So if we hadn't taken all this sell side liquidity for the rest of the night, I would have had a bearish bias for the day. But because we took sell side liquidity, we went up after the open. And I mean, we did take the last bit of sell side at open, but we went up for the rest of the day. And so my bias would have been bearish through the day, but because we took all that sell side through the remainder of the night, I wanted to see that last bit of sell side get swept right here. And then we also had a volume imbalance right here. That was my take profit on Friday. That was my partial, and that was my take profit. It was right down here, because if you, oh, dang it. If I were to put a line at the top of this, look what it did. It tapped into it, and then we went up afterwards. That was all the market needed to rebalance itself, allowing it to go up. Price was balanced below after that. So the
That
market
was
was
your
able
entry
to.
right there.
No, no. My entry was, I'll have to drop to the 1 minute.
Mm-hmm.
So I will show you my concept as to why I took the trade. So we closed here. Did we open down there? Did we open up there? 360. So we did open up there. Cool. So every day, what I like to do right at market open is if there's an opening gap, I draw that out. A lot of time the market will want to reach up into that opening gap, and either it's going to tap off the 50% or it's going to close completely through it. If it taps all the 50%, then expect it to go the other way, or it can straight up reject it and just go the other direction. So every morning, right at market open, I draw this up. That's how that's how you'll see me catch trades and post my profits so quickly in the morning, is because I'm watching this at the immediate market open.
Okay.
Yep. And another thing I'll tell people is the market isn't paying attention to overnight movement. The market is paying attention to previous day's movement. It will attack the previous day. So it's good to look at these areas too at market open, because the market will sweep those. It's not looking at overnight movement, it's looking at previous day. Now from there, after around 10 o'clock, it's going to start moving towards liquidity in other areas from overnight movement too. But the initial start of the day, it's hunting down liquidity that was left behind from the previous day. So as you can see, the market came up. It tapped off this 50%. It wanted to go through it, but then it closed underneath. And then the market, let me see if I can get a better drawing. Oh, well, for some reason I thought it tapped off 50% perfectly on Friday. Oh, that's probably because I had it drawn like this. I didn't have it zoomed in. So it came down, failed to take sell side. So the market then moved to the buy side. And it got to the 50% mark and it stayed underneath it. It tried again and it closed. It pushed up and then came immediately back. I immediately took my entrance right here with my stop loss right here above this wick. And then I targeted to 332. Well, I took a partial at 340 because that was
That was a sniper entry, basically.
that was this low. Yeah, bro. You'll get to a place where you thinking on the spot like that. No hesitation. You see it happening, and that's where it just takes time and practice, bro. You see it happening and you know immediately what's going on. And it's just from repetition, and seeing the same thing happen a million times. And when that happens, like, then you'll take trades before anyone else does, and you'll be in and out of positions before they even had a chance to think about entering. I even did it. Humble wasn't even quick enough to take this trade because I wanted to see this stuff taken at the open, and I almost got faked out right here, but I immediately exited. And I waited because I started to see that the market wanted to push back because it wicked down. It went into here and it came back strong. And I said, oh, hold up, and hopped out at break even. And so then I waited to see how, because it looked, I had a feeling it wanted to push back up. And it took all this buy side liquidity right here too. So it not only did it rip back up to the upside, bounce off the 50%, it took all this buy side liquidity. And so what does that mean next? Sell side, right? So it came down, took all this sell side liquidity, took all this sell side liquidity, and then it bounced off the volume imbalance that was right there, turning the market bullish afterwards because that was an immediate rebalance of price. I mean, there's other confluences that played into the trade. Of course, you got your order block that's sitting right here that tapped into your bearish order block. I mean, you got an inversion as well that's right here. So bearish inversion. I mean, that's about it. Now you got your volume imbalance that's right here that it tapped off of as well. But there's two confluences right there that you could take to the downside. So there's more than two. We just swept all this buy side. We rejected the 50%, and we rejected the bearish inversion and the bearish order block. So there's four confluences right there. So that tells you what sell side immediately. You think on your toes quick and you'll make money quick. But as you know, like when you first are doing this, there's always going to be hesitation. What if this doesn't play out correctly? That's why I said repetition, bro, because you'll get to a place where you've seen it so many times, you know what's going to happen because of it.
Understandable.
And that's why you see Humble's trades, bro, on TikTok. The dude's a genius. I mean, like I can't say, like, a lot of people just don't see it. But let's get back on topic. So let's talk about some inversion fair value gaps. INV, I do want you to speak up here in a second because I know you had some things you kind of had questions on. But let me run through inversion fair value gaps real quick just so I can refresh people's mind on anything and maybe cause them to have questions, or that way I can teach some people that may not know them too well. So let's see if I can find one. I love it. There we go. All right, I'm going to clear this. Inverted fair value gaps. An inverted fair value gap is a fair value gap that its intended purpose was to be played one direction. So say you had a bullish fair value gap, right? and you want to use it to play to the upside. Oh my Lord, if I can click on the right thing, awesome. So you had this bullish fair value gap, correct? And your intended purpose for it was for you to use it to the upside. Unfortunately, that didn't happen. The market said, screw your fair value gap. I'm going to close through you. And what happened? The market closed through it. Now, don't be disheartened in these situations, because what does that create? Well, it creates an inverted fair value gap, which means now that bullish fair value gap becomes a bearish inverted fair value gap, which can be used to play in the opposite direction. Now, what do you see here? The market used this bearish fair value gap to play in the opposite direction. Beautiful, right? Now, let's look at another one. Well, before I even do that, not only do you have that, but you also have this bearish fair value gap right here. Just a regular Humpty-Doo bearish fair value gap. So you got two confluences right here. It's a beautiful setup. Beautiful setup. Couldn't ask for anything better. You could target this sell side point right down here. I would take a partial, an immediate partial right here, because as you can see, initially we wicked right off this volume imbalance. But I would target this as my full take profit entrance here, stop loss up here. Target the downside. Now, say you missed the opportunity. Don't be sad, because the market likes to repeat itself all the time. What do you have here, y'all? We have another bullish fair value gap. What happened though? The market said no. But, like I said, don't be disheartened, because what happened over here? The market used it again to play to the downside. And you could go for, I don't know if the market dumps. Yeah, it does. And you could have caught this up until 4 o'clock. So you could have gotten all the way down to here. So that'd have been a solid trade. But, well, I take that back a little bit. Unless your stop loss was up here, that wouldn't have worked out in your favor. Well, I take that back again. I'm incorrect. So if you were going for the long distance, yeah, you would have been tapped out of your trade. But say you entered right here and you just targeted this sell side right here, you would have won your trade before the market reversed and would have came back up and knocked you out of your position. You know. So let's see what that would have looked like. So if we sold one contract, we entered right here at the bottom of this fair value gap, our stop loss went above. I would do it above that candle. So you risked $80 and your target $500 on one contract. So you risked $80. You made 500, and nope, can't do that one. That was the wrong one. Whoops.
Humble, how are you? I mean, not humble. Lee,
What did you just call me?
Call this man humble, and you acting just like humble, for real, for real. So based off the risk management, right? How much are you exactly risking? I know you told me, but it's more like I feel like there will be a difference between passing the account and then having the funded account. Is there a different risk management in both, or how does that work for you actually?
Hold up. I'm ADHD and I can only focus on one thing at a time. And right now my mind is focused.
Take your time.
My mind is focused on this. I'm sorry. So what was that? That was a 5.69 risk to reward. Okay, what was your question?
Basically, does your risk management change when you're using like okay, so when you're in the funded account, your risk management is a little bit lower than the passing account phase?
Yes, I'm more risky on evals because I'm not going to sit there and trade for 5 days, 10 days, however long it takes to be a safe trader, only to get unlucky one day and blow the evaluation. I rather I'll risk 25% of the total drawdown to sometimes 50%, depending on how good the trade setup looks. Typically it's 25%. Don't like to go past that. It's very rare I've done anything past that. So please don't do 50% unless you really know that the market's going to run in your favor. But I'll risk 25%. So $4,500 drawdown, 25% is what, 1,100 and I think 25. Let's see.
Oh, you risky.
1125 times 4. Yeah, 1,125. So I'll risk 1,125 to make $4,500. That's not risky. That's actually a really good trade. Risking $1,100 to make 4,500. In my opinion, that's a good trade. That's a good trade.
Most people will call you crazy for even doing that.
Well, dude, here's, like I said, I'd rather mess up on a trade, have to reset the account, on the first day, and then make $4,500 immediately after that. Cool, I'm already halfway to my goal. Instead of spending 4 days making 1,000, 1,500, 2,000, 500, whatever it is, only to screw up on the very last day. You know?
Yeah, that's reasonable. So when you go buy from, because that's your typical risk management when passing an account. Now, how bad, like how far do you drop when you're on the funded account? Are you just risking $500 to $400?
No, I have it written down. Let me find it.
Reason why I'm asking, because I'm I'm going to start a new 150K account. I would love to follow your risk management.
I like that you asked that. So on a 50K account, if you're below $1,500 in profit, you use no more than 2 lots. If you're at 1,500 to 2,000, then you use 3 lots. If you're above 2,000, then you can use up to 5 lots. On a 100K account, if you're below 1,500, you use 3 lots. 1,500 to 2,000, 4 lots. 2,000 to 3,000, 5 lots, and above 3,000, 10 lots.
Gotcha.
On a 150K account, below 1,500, 3 lots. 1,500 to 2,000, 4 lots. 2,000 to 3,000, 5 lots. 3,000 to 4,500, 10 lots, and above 4,500, 15 lots.
Oh, you're crazy if you're going over 15, but then again.
No, those are micros.
Funny. Oh, the micros. Oh,
yeah.
Okay.
That's when you're first building your account. Now, once you're over like 10 grand and buffer, that's when I will swap to minis. Because at that point, I have enough buffer in my account. And when I say 10 grand, that's on top of the 4,500. So you made 14,500 in buffer at that point. Then then you swap to minis because your account can handle it at that point. Now from there, I will never do more than 5 minis. And 5 minis is a very rare occasion. I only have done 5 minis when I know the market is going to make a big move and I need to be able to take partials along the way.
Gotcha.
And I'm very confident in that trade because instead of taking a whole bunch of micros, which make you 1/10 the profit, my account's in a place where it can handle larger risk, but I'm also at the same time more confident in my trades too, to where I'm willing to risk the minis at this point. Now, if I'm risking 5 contracts, my risk management at that point is going to be $2,000 to $2,500 because I'm running 5 contracts at that point, which means every dollar it moves is $100. So if it moves $25 against me, then I'm out. And that's kind of a tight stop loss in a way. Not for 5 contracts. Now, do I typically do that? Heck no. I've done that maybe 4 to 10 times, maybe not more than 10.
Or
I am a 2 to 3 contract kind of guy. I like to take 1 to 2 partials and then full take profit. But so that's typically what I do, and I can post that those notes that I just told you in the chat.
Please
so
do.
you guys, yeah, so that y'all have them saved. But that's typically my go-to when I'm on micros, when I'm first starting on a funded. Now, when I'm doing evaluation, I'm a little bit more risky because, like I said, I'd rather get it done quickly and maybe have to reset the account once or twice just from me screwing up than having to spend than me spending a week working on it only to blow it by having an unlucky moment in the market. Because it's a casino. It's a casino at the end of the day. You play around a casino long enough, you're gonna lose at some point. I don't care what anyone says. You can be the best trader ever and you're gonna get wrong eventually. The most profitable traders on Apex, their risk management, their biggest trade losses are $3,000. And those are people who are running multiple accounts. And then typically their highest win per account is $3,000. So, I mean, I don't know how many accounts they're running, but their total between all the accounts is 3,000. And those are the most successful people that are with Apex. I remember seeing a post about that. I forget. I wish I could find the link for it. But you gotta do. It doesn't matter what I tell you. You gotta do what you're comfortable with. You know, some people aren't gonna be comfortable with a $2,500 loss. Me, on the other hand, I know I can be in a $4,500 drawdown, take a $2,500 loss, and then I know if I sit and wait for the next A+ setup, I can make $4,000.
I would love to like study your A+ setup a bit more.
And the more confluent, it's just my confluences, man. I'm just looking for as many confluences as possible. And then I'm waiting for the market to show me that it wants to take that liquidity that I'm aiming for, targeting equal highs, equal lows, relative highs, relative lows, stuff like that. I'm just waiting for it to show me that major sell side, major buy side, you know?
And I was
just
like,
waiting
most
for
of your take profits are at liquidity, right?
Oh yeah. Oh yeah. All my take profits are at like major highs and major lows typically.
Major highs, major lows, writing that down.
So let's go back to inversions, right? Okay. So let's see if I can find one. Oh, I love it. See, you start picking up on these things very easily after a while. So what do we have here? We have oh, I've already done bearish. Dang it. All right, so that's a bearish inversion fair value gap once again. Market came up, used it initially, but came down, closed through it. Market came back up, used it, tapped into it only to play to the downside afterwards. And you could have targeted here, and then you could have done a full take profit here. What the market did, I'm surprised it didn't reach down all the way into here. Does it eventually? Ooh, it probably will on Monday. So the market tapped into this volume imbalance. It tapped into this volume imbalance, but it didn't make it to this one. It was so close to it too. It's going to want that. That's an inefficiency right there that the market will want. Huh, that's funny. All right, let me find a bullish inversion. Nope. There we go. So we initially had this bearish fair value gap right here. Market came up though, closed through it right here. And then it used it to play to the upside. So it wicked into it right here and then played into the upside. So you got bearish fair inversions where it was originally meant to be a bullish fair value gap, got closed through, but then it came back up, played into it, only to be used in the other direction. And then you got bullish inversions where it originally was made to be bearish, but market came back up, closed through it, and then it got used to play to the upside instead. So those are bullish and bearish fair value gaps, inverted fair value gaps. Sorry. Now I'm gonna kind of open it up to questions at this point because I do kind of want to see what y'all want to know. I just wanted to go over those two things just to kind of catch up. Descendant and the bestest. I've been working with them, so I kind of wanted to catch them up to that stuff just to clarify anything in case they still had questions. But yeah, so what? Oh, look at that. That's beautiful. I love it. You have a beautiful bearish inversion right there. Multiple chances to enter. Here, target here. Here, you can target here. Here, you could target all the way down here. Even target down here, right before market close. And that would have been a good setup too, due to the fact that it didn't wick up through the fair value gap at all. Sometimes you'll have the market barely wick through a fair value gap. And that's because market makers know people are using those fair value gaps and they'll wick it through a fair value gap to knock someone out of their position, only for the trade to play out to their favor. I see it all the time, but that's why I set my stop losses a few dollars away from a fair value gap, even though it causes me to risk a little bit more, because I'm not going to get taken out by a wick. A 50-cent wick through a box. I'm not letting that happen. Because it does happen. I wonder if I can find an example of that.
So anything that closes under the 50% line, even the order block itself too, that's just
Yep.
a no-go for you.
Yeah, I typically like to stay away from it unless I really if it closes out over 50%, yeah, I like to stay away from it because that's a less likely probability trade. So I will typically try to stay out of that if I can. Yeah, if the market for some reason continues the other direction or continues that direction, then yeah, at that point, I'll look for my next entrance.
Do you ever trade against that though? Like for example, like someone it closed to 50%, right? And then
Okay.
boom, that's like a small entry you can take for like the next liquidity.
What do you mean? Wait, explain that one more time.
So for that last example that you were just at, like the one at the bottom, not the top here, where you just like that example you just gave us right there, yeah, where your cursor is. So let's say like that fair value gap right there was it got closed through the 50%, right?
Here?
Yeah, let's just use that for example. That one got
Okay.
closed, right?
Okay.
Would you take an entry based
I
off
thought
that?
if it closed over 50%,
Yeah.
no, I would consider this a missed trade, and then I'd look for it to take another high, come back into a fair value gap, and show a continuation.
Gotcha.
So like you have this high. You got this one here. Well, let me draw these out because I'm going to see if there's multiple opportunities going up. Okay. So we swept this high. Did not create a fair value gap to enter in on. We didn't have any pullback, like, at all. We immediately came up. Well, that's because we swept both these highs right here. So you could remove that. You could remove that. Now we did sweep this high, which is when we had a little bit of slight pullback. This is the one I started off in the beginning talking about. So then this would have been my next entrance right here. Because then also remember, don't forget, that created a bullish order block too right here, which it tapped into. So you got two confluences right there. So if I saw this happen and it closed through more than 50%, I wouldn't take that. I would wait for the next high to be swept, where it creates a fair value gap that gets played back into, respected, and pushed to the upside. Then I would enter there. Because it closed above 50%, and it also tapped into this bullish order block and immediately wicked back up. So that's a beautiful sign to take that trade. And then I would attack.
Gotcha.
It's a relative highs too. Where was that? So the crappy part is you got to use OTE on this. You couldn't even use OTE. You'd be out of your position before it even reached the top. Let's see what standard deviation looks like. Oh, that's better. That's much better. I love that. So you would draw from this high to this low after you entered. And then I would more than likely take it at the -1. But you could continue watching that and see how it responds to each standard deviation. And then my thing is I'd probably get out once I saw that it was rejecting this area, but confirmation would be it closing through this one right here. So I would get out of the trade at that point right there, because this puts you into all-time highs. So you don't know how far it's going to go. So I mean, like, your entrance would be right here. You do a partial right here. And then you could just wait for it to take your profit once you began seeing a reversal coming back down. Gosh, standard deviations are just so beautifully used. So, oh wow, wait, hold on. Yeah, it closed underneath it. Yeah, that's where I'd get out right there. This stayed completely underneath it. That would have been my sign for an exit right there. So you could wait for that next fair value gap to get created. You could go ahead, enter here, because you also got that order block down here. Then as it's moving up, I would draw up my standard deviation from this low to this high. I'd take a partial here, the -1, and then I'd continue watching from there to see how it responded to each one of these. And then once I saw that it closed underneath here and stayed underneath here on the next candle, that would have been my sign to get out. So that's what I would have done. So who's got questions? You also got this bearish fair value gap, which you could use into a trade. Then you also got this inversion too. So you got multiple confluences right there that play into your favor.
League,
Yes.
to be honest, I'm still not good in spotting these fair value gaps, you know. I can hear what you're saying and I can see you're spotting them very quickly, but I still need like a little training of the eye to really spot them.
Oh yeah, that's what I was telling you. You're gonna have to. You'll want to spend this week focusing on just finding them as they happen in the market, drawing them out. You're gonna have to train your eye to find them, to spot them as they happen. It's gonna take a little bit to get your eye used to spotting those things, you know?
Yeah. Okay.
Yeah, so just practice for this upcoming week. Like I would trade. I don't know if you want to continue trading the market.
No, I'll pause a bit and I want to learn this concept like deeply. So
Yeah.
yeah.
Hey, League, show him like I know you don't want him to go on like YouTube and stuff like that. Show him like an actual criteria of a fair value gap, because some people, I'm surprised that some people do get confused by it, but I can see why too. In my perspective from the very beginning, some people don't realize that there's multiple different types, but it's fairly simple once you show like 5 to 10 of them, you know, real quick, and it can be any type of fair value gap. Just show them like how you spot them and just spot the right ones instead of like the bad ones.
I mean, if you look through here, there's 1, 2, 3, 4, 5, 6 fair value gaps all through right here. 7. So I'm just gonna make a big ass candle. So let's look at this candle right here.
What if you went into like replay mode and like you just showed him one forming in like real time?
The replay mode kind of really sucks on TradingView because it doesn't show the actual candles moving properly.
Yeah, it prints the whole candle, right?
The candles just appear. Yeah, it just prints the candle. Just the candle pops up and it's not like actually moving like it's supposed to. But I can't do that. So you see this wick right here. And then you see, wrong way. That wick right there. And then you have this gap that's between them. So between this wick and this wick, you have a gap right here. That's what makes it a fair value gap. Oh, look at that. I can literally put it right there. So is this wick right here stopping there? This wick right here stopping there. It's the space that's in between. Because like, let's say you go and look at this candle, right? So you got this wick all the way down here, this wick all the way up here. There's no gap in between here because the wicks run completely through both sides of the candle, the middle candle. So whereas like, let's say you look right here, you got this wick, and then you also got this wick, right? And then what's in between? You got this space in between them, both those wicks. That's what creates a fair value gap. You look here.
I follow now.
Okay.
Yeah, but you can keep on going. But yeah, I'm getting what you're saying now. Yeah.
Yeah. All right. So then you got this wick here and this wick here. And that space that's in between. Okay. Well, if it will let me. That's another fair value gap. It's the gap between these two wicks on the candle. So it's this one and then this one. Come down more. You got a wick here. You got this fair value gap as well. It's the space in between the candles. And come up. Couldn't use this as a fair value gap. Why? Because this wick passes this wick. So these two wicks pass each other. Think about two cars passing each other. So this car's going this way, this car's going this way. It left no gap in between. No space. Now you got this area right here. This car parked right here. And this car parked right here. And what they do, they left a space in between that area. There's your fair value gap. But these two cars passed each other, leaving no space in between on this candle, making it not a fair value gap. Come up some more. You got this wick here, making it a fair value gap. Fortunately, the market loop-de-dooped back down straight through it afterwards because we were in all-time highs. Funny thing is, though, is look, it played into it immediately. Turned it into a bearish inversion fair value gap, which you could use to take a trade. But as you can see, it's the space that's in between the first wick and the second wick, or the third wick. The first candle and the third candle. It's the space that's in between the second candle of the first and the third. Space in between. The space here, 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 all the way down. And I could keep drawing them. There's one here. There's a tiny little one right here. I mean, it's small. But even small fair value gaps still matter. I've used fair value gaps that were literally this size. Like, look how small this is. I've used fair value gaps that small to enter trades because they do work. That tiny little spot does work. And imagine this, like
that tiny spot right there, bro.
Yeah.
Oh,
I have used them to enter trades. And I wish I could pull them up and show you because it's funny when that happens, man.
Wait,
That's
can you hear me?
actually.
Yeah, I can hear you.
Cool. So I have a pretty good understanding with regular fair value gaps, bearish fair value gaps,
Okay.
inverted fair value gaps, order blocks now. And then it really clicked to me on this call about like having all of the confluences together that gives you the confirmation to take that trade. This past week when I was just doing like the paper trading, I was just taking them off the fair value gaps and not combining all those confluences together to give me better entry points. But now that that's sticking to me and it's made a lot more sense, what would you say is my next line of action to learn now that I have a good basis of?
I'll have to teach you breaker blocks.
You could
Don't go watching videos. Do not go watching videos. Let me teach you those. Let me teach you those in person. Because if you YouTube that, you're gonna find 15 different kinds of breaker blocks.
Gotcha.
Yeah, breaker blocks is the most hardest ones to actually learn because nobody has like exact criteria for it. Believe me, man, I've been like freaking searching up multiple videos for like breaker blocks, and there's no like actual criteria for that. So the best one that you can really work off is definitely from League. But I also recommend like everyone to like back test like at least 100 times to see like how the confluences are, because you might say you might know it, but there's like stuff that like you might have not seen now until like you keep back testing it. I think back testing it every day is just like should be like a thing that you should do daily, honestly. That's how I started passing my accounts. I may not got the same profits as League, but I mean back testing was helpful too. And I don't know, League, do you recommend back testing?
Yeah, forward testing too.
Oh, forward testing too, for sure. That stuff like back testing can do okay, but forward testing is so
Here's a breaker block.
important.
Here's a bearish breaker block. Ignore that. Got used right here. Got used right here. There's a bearish breaker.
And then what made that a bearish breaker block?
I'm going to show you in 1 second.
Cool.
I want to find a bullish one before I go into teaching it. These took me the longest to learn. They annoyed the crap out of me.
Oh man, you just skipped one.
You sure?
Yeah, you zoomed out right when I can't find it. I would have said something.
This
before.
one?
That would you? Nah, you wouldn't consider that one as a. Would you?
You could. You could. Because look. Well, it did take a high. It swept a low. In one leg, it swept a low, and then it swept a high. And then it played into it right here. That'd be such a waste, in my opinion. I wouldn't want to use that kind of breaker block for that situation.
I agree, though. I do agree that it is a breaker block. I just wouldn't personally use that one.
No, me neither.
Do you agree that breaker blocks are just so hard to spot, though?
No.
You spot one immediately when man, I'm still struggling on that stuff, man.
I spotted another one.
Oh man.
Now let's see if it's correct though. I couldn't tell on the wicks. If it closed through it, then no. Nope, it closed through it. I thought maybe it was one, but that is a breaker block. It just didn't get used. We swept a high, then we came down and took a low. Or wait. We swept a low. We swept a low, then came up and took a high. It'd be cool just to find one. There we go. Yes. I mean, you got two right here, actually. No, you couldn't use this one because we didn't take a low first. Oh wait, did we? Oh, we did. We took this low. So you got two breaker blocks right here. You got this one, but you also got this one. Let's see which one looks better. Either way, though, you got 2 of them, so that played out better. But I like that one. That one's a nice one. That's a pretty breaker block. Boom. Market came back up, closed through it, came back down, used it to its advantage to go back up. So a breaker block is a bullish one is when the market comes, sweeps a low like it did here. If I can draw this out right. And then what did it immediately do after that? It came and swept this high. All in one leg. So in one move, it came down, swept the low, and then came back up, swept the high. Now, that breaker block that we're looking at needs to be a green candle. It needs to be the highest one too. So it's this one right here. So you draw it from the body to the wick. So it's from here to up here. And the market comes over and uses it right here. Now on a bearish breaker, market needs to come up and sweep a high, which, I mean, it took all this right here. So it took all these highs right here. And then it needs to come down immediately following that and take a low, which is swept this low right here. So the candle that you have to use, though, needs to be a black candle. And that black candle needs to be what sweeps the low because it's a bearish one. So it needs to be black, and the candle that you're using has to be the one that's taking the low. If it's not the one that's taking the low, then it's not correct. And so what happens? Market closes through it. Market comes back and uses it, though, to play to the downside. And that's what, 391 to... No, that's not as big of a move as it looks on here. But, I mean, you could have taken the trade all the way down to here. It should have been a 50-point move. It looks bigger for some reason. But they're confusing, bro. I wouldn't get too focused on them, really, for right now. Well, except for you, Explorer. Because now you're moving on to the next thing. But yeah, so you have the market come down, it swept these lows, immediately came back up following that and swept these highs. So what would your bullish breaker be? This candle right here, green candle that swept the highs. And I'm not sure how well the market used it. They used it a good bit. Look at that, though. It almost closed through it down there. But it tapped into it here off the 50%, and then the market almost closed through it here, only to play to the upside. Now, would you really want to use this in a trade? I mean, if you thought the market was built bullish, then yes, I would use this in a trade. But as you can see, it's a low swept, a lower low, and a lower low. So that's confirmation to me that the market's reversing. Why? You can't type that, bro? You had to type that embodiment? You couldn't just say it?
I didn't want to interrupt you. Jesus. I want to be at least respectful.
This class was originally set up for you, dude.
What, man? Dude, you answer everything I need to know. I'm not like a super beginner. It's more like actually I have to apply everything you did, so I have like everything scheduled to apply it tomorrow. Honestly,
Well, so you and me, let's find a time to meet later this week, just you and I, one-on-one. That
Mhm.
way we can kind of go more in depth on where you're currently at and what I need to do to help you. Okay.
Yes, sir. I mean, text me when you can. I have to go to sleep early because I gotta wake up at 4 a.m., bro.
Well, yeah,
Oh
let me know
man,
your schedule because I will try to fit myself around that. You know my availability is towards nighttime, so let me know.
anytime at night is perfect, honestly. But yeah, I'll let you know basically.
Okay. Well, you have a good
All
night, my
right,
dude.
all right, y'all. Y'all have a nice night, and bro. Oh yeah, and League, try to like, and for the new guys, it's kind of hard to like learn the fair value gaps and stuff like that off rip. Um,
I know. And then we're over here spitting order blocks and breaker blocks at them,
yeah, just throwing them all at them.
just
It's
making it
really
more
hard.
complicated.
I'll say this, like for how I learn it is basically if League draws one up, you have to like draw one up yourself. The more you apply it, like you know, hands on for yourself too, the more fast you will learn it and understand it a bit more and see what he's saying. So that's all I can, throw out of how I learned fair value guys fairly quickly. But breaker blocks and order blocks and all that stuff, dude, that stuff is complicated. You know what I mean?
That takes
League
time.
is the only one. Yeah, that's that. I'll say that League. I'll let you break that one down, man, because that stuff is complicated.
Well, thanks, bro.
But yeah, trust in League, y'all, bro. Because like I said, bro, you saw the payouts, you saw the stuff, and he's kind of like you're still new at teaching, so just give him like some time, and he'll walk y'all through it. I really trust bro, and he's really been helpful. So yeah, that's all I can throw out there. Really good guy, really good guy.
I've been teaching for a while. I've had this
You
group
have?
chat for I've had this group chat for over a year.
Oh man, hey, you made it sound like you make it sound like you're new at it though, but you're really doing great too
No, no,
on
no.
top of it.
I haven't charged people. That's what I'm new at.
Oh yeah, that charge that's gonna make them reoccurring. But hey, keep doing you, bro. You got it.
So I'm in a place right now. I just want to help people over try to make $1 off of someone that's wanting help. You know.
For real, we need more people like you. Cause like a lot of us, yeah, like I said, 90% of people fail on this stuff, but it's it's more of like a psychology game more than anything. When you got all the knowledge, it's just now you have to learn of how League trades, and League breaks it down pretty good. That's what I like about it, honestly.
I'm dyslexic, so I try to break it down how I would understand it. if I didn't know
Same.
what, if I didn't know, I try to break it down how I would get it if someone were to explain it to me.
No, truly, I'm the same thing, man. I have like a speech impediment, so it's kind of really hard for me to. It's hard for me to learn, but it's also hard for me to speak. So
Well, you do a good
it's
job because I've never noticed.
bro. I'm choking on my words all the time. You just don't notice.
Well, you do a good
Oh
job
man,
at covering it up. So, but we also don't talk on the mic every day.
for real. But it's more like I don't know what League's doing. You know?
ICT, nothing special.
League is the only one I touch.
Me too. I was wondering what's happening.
You say what?
I was also wondering what's happening because the
Oh,
other flow traders can talk a lot. But it was like
yeah.
they're not backing up their stuff. So I was like, and this guy Lee come here and post, I am done for the day before market start. I was like, what? What's up?
Yeah. League. I know exactly. After looking at Humble and then realizing how League is doing it, I'm like, they're done before the market even opens.
Yeah,
Like, what's
the
this?
embodiment, like League actually had like 100% win rate with options too, not just futures.
Which throws me off of why you still come to freaking futures. I mean, you had it set
Because
on options.
I don't like Greeks.
Understandable.
The Greeks piss me off. I don't like paying for time. That annoyed me. You have a 30-minute to 1 hour period of consolidation, and you're
Mhm.
screwed. You just screwed, bro. You lost your money. You ain't getting that back.
Boy.
So I got tired of that because I was trading SPX. I was trading the NDX. So I'm already trading the indexes. And a contract on SPX costs anywhere from 500 to $3,000, depending on how far out of the money or how far deep in the money it is, you know? And then I was spending 8 to 10 grand to sometimes 15 grand per contract on NDX because it would move like the NASDAQ would. And I got tired of consolidation and time eating away at my profits.
Mhm.
And then when I found out about ES and NQ and futures and how it costs $1,000 to have a contract, and you can hold that bitch as long as you want, and price dictates pay, not time or volatility, or Greeks dictate your pay. I was like, what the fuck am I doing? Like, so uh, and then I started seeing videos online of ICT videos, and it started making me question things in the market. And so I started just like back testing stuff I was watching. Market taking out highs, the market taking out lows. And I started to see how that was very intriguing because it happened quite often, very often. And so then then Humble, his TikTok popped up on my For You page. And so I followed him and started watching his videos for a while, and that man was not missing trades. He was hitting them dead on every time. And so I just messaged him one night. I said, hey, I'm interested in joining your chat. Like, can you tell me a little bit more about ICT? He goes, well, how do you trade? And I was like, I trade off gamma and gex and levels. He goes, well, I'm going to go and tell you all of that shit is bullshit. I was like, hey, I didn't start this chat to be talked down to. I was trying to talk to you to learn. So I was like, you don't have to talk to me like that. That's how me and him first met. He goes, I'm not trying to be disrespectful. He's like, just if you give ICT a chance, you will see everything else in the market doesn't matter and is just a whole bunch of bullshit. And I was like, I told him, I said, okay, I'm interested. And I thought to myself, I was like, okay, worst thing that happens is I lose $50, you know, to his membership fees. And then I learned something that may help me, you know. That's the worst that can happen. But after a week of just doing his live streams, after 3 live streams with him in a one-on-one session, I was sold on ICT. I realized that that truly was how the market moves. And so I threw myself full force into it. And Mike and a few other guys stuck around this group chat because, of course, my end goal is to get back to a place where I can send out call outs for calls and puts on options using ICT. Just right now, I'm just trying to develop that consistency in ICT with futures still. Plus, I have these prop firm accounts that are doing really good, so I just haven't had a reason to swap back yet. And also, I'm not risking my own capital with these prop firm accounts, so that's another reason why I haven't swapped back yet. But yeah, the main reason is just because like I got tired of dealing with the Greeks. That stuff annoyed me. Especially like if I bought an SPX contract and it was $15 past the strike price and I was in the red and I lost money when I should be up $1,500. And I paid the $800 for that contract and I lost 400 of it or 500 or 600 of it already. Like that's what got tired, and it was because of the volatility dropping and the time almost running out. And I got tired of having to pay for more time.
Mhm.
So, and just right now, futures are working really good for me. But like I said, I'll eventually swap back. And I do little lotto tickets here and there. I mean, I don't really talk about it. But I do take.
Lottery
I'll take.
tickets?
No, no.
Oh,
I'll
say.
take some. I'll take some SPX trades. Whenever I see ES dropping or going up a lot. I'll take like one contract that's kind of far out of the money, and if it hits, it hits. If it doesn't, it doesn't. The most I lose is like $200 to $300, maybe $400. But that's just like money I'm okay losing. So like if it, I could double, triple it, quadruple it.
Mhm.
But I don't share that on the chat because I know not everyone's just going to be cool with pissing away $400 if whether it hits or not.
That's crazy, man. Just thinking about it, like you. Well, you gotta realize, y'all. Like everybody is struggling to make payouts, as you can see, in both Lorenzo's and yours, basically, group chats, and it's really hard to like adapt to. Everybody builds bad habits, especially starting off
Yeah.
in trading, bro. That stuff has to like if you can master
Me?
and
No, I take my best trades at market open
Mhm.
or 9:45 or 10 a.m. That first
Mhm.
30-minute window, I like to be done by then.
So
Now
the first
there's
30 minutes when it opens, that's when you take the trade sometimes.
so depending on what the market does at open, I may enter
Mhm.
immediately. Because it may shoot for the 50% mark of the opening gap, or it may reject it and play the other direction and take some buy side or sell side liquidity. So
Mhm.
there's an opportunity. There's two opportunities there. The first opportunity is for you to take the trade to the 50% mark of the opening gap, or for it to, or you wait to see a rejection and it play the opposite direction. And then you got 9:45, which the market can reverse at 9:45. If the market doesn't reverse at 9:45, then you got 10 o'clock.
Yeah,
And so,
I'm definitely have to see that. Like, I'm one of those guys that need that visual, and you know what I
yeah,
mean.
I know
Because
I'm the
that
same
one
way.
right there is a little bit complicated how it sounds. I'm like, bro,
Yeah.
that sounds advanced, but bro, how the fuck am I going to see that shit?
Look at that though. It stayed under this, stayed under this, stayed under this, and then closed through it right at the end. That's just
is that
beautiful. I love
is that the
what?
OTE?
Yeah, it's OTE. You even got this one. If I moved it from here to here.
So wait,
Uh,
the OTE levels work like that too? I thought like when you reach the take profit levels, that's
OTE
when.
is for. So I use OTE if I'm gonna go for short plays.
Oh,
Standard
like
deviation.
trading against the market.
If I'm trading like short little areas, then yeah, I'll use OTE. Um, if I'm trading longer trays, so if I'm taking a long position to go further in the market,
Mm.
then I'll do standard deviation. So like, why is it? I didn't mean to put that right there.
Oh, quick question: how many trades do you really typically take per day?
One.
Just one?
Yeah.
Damn. Because
So yeah,
typically you need
so
like
this is
two
like a long
thousand.
play. Yeah, dude.
Jesus.
I go for
Like,
50 to 100 plus handles.
oh man,
That's what I want to see that.
and to manage that
Typically,
like each day is pretty impressive, actually.
yeah, it takes time, dude. It's not something easy to do. You have to be able to spot something as it's happening, and you have to be able to hop in immediately without hesitation.
Let's
If you
say,
wait too long, you'll miss it.
let's say you miss like one trade. I mean, like you just got stumped out. Cause I remember you said like it was like last week you had to take like two because one didn't go in your favor. Do you typically take like 1 to 3 trades per day, or what's your maximum trades? That's what I wanted to figure out.
Three trades.
Yeah,
Yeah.
3 trades per day.
There's one day I had 2 bad trades, put me at negative 2,800 for the day on each account. So what was that? 2,800 times 5. Let's see what that was.
That wasn't too long ago, was
That
it?
was 14 grand. Yeah, I was down 14,000 off 2 trades. And because
Made it back up.
the market kept faking me out. And then I took another trade. I just sat there and I waited for the right setup. I entered and I closed out at 35.25 profit. Or it was like around 3,000 per account. So that was like $6,000 I made per account. Yeah. Yeah, that's my math's right. What day was that? Let me pull this up.
League
You and
on
Embodiment, you guys should do like a trading podcast.
You said what?
The two of you should do a trading podcast.
Who?
You and Embodiment. He's
Oh.
Me and him got
he's
the
good at
same.
like flowing into different topics.
Yeah, so that was the day. That was July 11th. So what day was that? That was 1, 2, 3 Fridays ago. Now, what were you about to
that was
say?
that day.
Yeah, what were you about to say, Explorer?
On Friday when I was doing like my paper trading account,
Yeah.
every single time I got into a trade, it would like get me in the trade like so far ahead of where it was or so far below of where it was. Like my entry point wasn't where price was at. It was either like super below or super above. Do you know why that is?
Were you trading on delayed data?
I could have been, yeah. I never know how to tell. Like you always tell me when you're right next to me, but I never know how to tell.
So do you have your chart? Do you have your chart pulled up right now?
No, I'm on my phone.
Do you have pull up your? You should still be able to hear me, but pull up TradingView real quick. Well, you don't need to do that. Look at my screen.
Yeah.
If you have delayed data, you're gonna have this letter D that's right here, and it's gonna be golden. It's gonna be golden colored. It'll be a capital D, and so that'll say delayed data. If you hover your mouse over it, it'll say it's delayed by like 10 minutes. But I don't know if it will let you trade on delayed data. I'm not sure if that's even a possibility.
I had that same experience. What I did was just restart my trading view.
Yeah, because I was about to say you may have just needed to restart your trading view, honestly. Like, because I think that happened.
It was very weird.
Because that happened to me when I first downloaded TradingView and I was exploring how to work it one night, my first night after I downloaded it. And it was when I entered trades, it was putting me like immediately at like negative $400, $500. And I was like, what the fuck's going on? The market's not moving. It's 2:00 in the morning. And so that's what I would do. I would just reset it because I know you're not paying for a subscription yet. So I don't know. It shouldn't be causing you to trade delayed data because I don't even think you can trade delayed data. If you could, we would have found a cheat in the system because then you could have someone trading delayed data on a real account, and then you pull up your account and you can basically predict the future for them.
Right. Lee, real quick, what is your now we all have to have routines when we go to the market, right? What's your pre-market routine, right? Before you even start trading, what does that pre-market routine look like?
You motherfucker, I told you when we first started.
I know. Like, but we gotta tell the people too, you know.
I told everyone in here. Oh, Digital's here. I didn't even realize it. Digital's here. What's up, my dude? No, so like I said, I'll hop on the chart 8:30.
Mhm.
I make my coffee first if we're gonna go that detailed. I put some milk and creamer in it and I stir it. Then I come and sit down at my computer and turn on my mouse and my PC, pull up the charts. I pull up TradingView, go ahead and pull up Forex Factory. I go ahead and pull up NinjaTrader and set up the copy trader. And then I examine the chart. Start at the 4 hour, like I said. I draw out highs and lows that haven't been taken out. Typically, sometimes I will pull up. Is it gonna show it? What the frick is it showing right now? Is it not show? Oh, that may be too high of a. Yep, there we go. So when I pull up the 4 hour, I'll go ahead and mark up my highs and my lows. And then after that, like I was showing y'all earlier, then I'll drop to the 15. I'll see if any of those highs and lows match up with any London sessions, Asia sessions, New York sessions. And then if it does that, then I'll typically write it on there too. Afterwards, I'll drop to the 5 minute. I'll get rid of this at that point. Because then like other sessions, highs and lows, the market does like to take them. Those are considered usually major liquidity areas. But then I'll drop down to the 5 minute. I'll kind of see if there's any relative highs and relative lows that I'm able to see on a smaller time frame, because as you know, the time frame won't really show them as much unless like you have 2 4 hour candles that are literally the exact same height or exact same low, which doesn't always happen, but it does happen from time to time. But I'll drop to the 5 minute, see if there's any relatives. So you got like these right here, you got these up here. You got really, you got these right here, all through right here. You got these all through right here.
Equal highs, like those are considered equal highs and lows, right?
Well, we would
Or
have to check. So the high here is 459.75. That's 459.50. So they're 25 cents off. So they're not exactly equal highs. What is about this one? That's 460.25 and 460.50. So yeah, none of these are exact equal highs, but they're very, very close highs. This wick, this wick, this wick, and this wick. And it's on the 5 minute too. So they're not, it's not candle after another candle. Like if you drop down to the 1 minute and you saw 2 candles back to back, like right here and right here, that were the same height, I wouldn't really consider them equal highs. I want to see like the market come up, create a high, come back down, come back up again, create another high, and then those 2 highs line up. That's when I'd consider it an equal high. Same with lows. If I saw the market come down, create a low here, come back down, create a low here, and they're the exact same number, that's when I would use that as an equal low.
Oh man.
But so from there, I mean, we can just do this. So I'll go to the 4 hour. We'll just do here, here. Why is it? Try and do it too quickly. All right, boom. So that's 4 hour buy side liquidity, 4 hour buy side. We do got some sell side right here actually too. All right, cool. So we got these areas marked out. Now let's drop down to the 15 minute. We're going to zoom out. So we're just kind of focusing on this area right here. Well, that actually doesn't help because I know previous market sessions don't run at those times. Oh, wait, those are multiple days. Never mind. So we look at this. and we see that we got the New York AM low on this one. We got another New York AM low here. So guessing, yep, that was the first 10 a.m. candle. That's why that's a 4-hour low. That's right here. You got the New York PM low, that's right here. You got the New York PM high, that's right here. You got the New York lunch high, that's right here. So then you can go in, and you can type those in if you want to on those, because those are different session highs and lows. Drop down to the 5-minute. Now I'm going to remove these. Now we see relative highs. So not only is it 4-hour buy side liquidity, that's also like, what was it? I think the New York PM high. Yeah, the New York PM high. And it's also
Yep.
relative highs. Then you got the New
And
York
so
lunch high. What's up?
I was gonna say, and so what makes like how do you indicate which high price is trying to shoot for? Do you go off based off the market structure on the lower time frame or the trend, or like what's your indicator of like, oh, that's gonna target that high guaranteed?
Well, I mean, first you gotta pay attention to what the market's doing. Are we in a bullish uptrend or a bullish downtrend? Because like you look here, we took buy side, minor buy side.
Mm-hmm.
Afterwards we came down, took sell side. Failed to take buy side, so we came and took sell side again, right?
Mm-hmm.
We came up, took buy side, failed to take sell side, came up, took more buy side, right? But we failed to take buy side up here. Came back down, took sell side here, came up, failed to take buy side, came down, took sell side, failed to take buy side, came down, took sell side, right? Came down, failed to take the next buy side liquidity or sell side liquidity down here. What did we do? We came back up, took buy side, took buy side. No, we failed to take buy side. Had a second attempt, failed to take it again. Market came down, took sell side here, came back up, failed to take, we took some buy side liquidity, came down, failed to take sell side, came back up, took buy side. Market failed to take the buy side liquidity up here, so we came down, took this sell side, came up, failed to take buy side here, so we came down, took more sell side liquidity, came down, took more sell side liquidity. Market reversed off this point, came back up, took buy side, failed to take sell side, took more buy side, and then market closed. So it's about figuring out what the market, what are we in a uptrend or are we in a downtrend, right? So, and I'll use this as an example. So let me delete this. So we have this high right here, right? And what did I say? Market failed to take it. So market failed to take it right here. So we came down, took some sell side liquidity. Market came back up, made a lower high. So didn't go above this one. So once again, oh man, wrong one. Market failed to take this again. As you can see, it didn't close through it. So this is like, now you're starting to see a reversal happen here at this point. Came down, made a lower low, right? Came down, made a lower low. Oops, sorry. So now we're starting to take lows and we're starting to make lower highs. So the market's starting to reverse now at this point. So what I'm wanting to see though is the market to come down, take sell side, right? But as it's coming down, it create a fair value gap that can be used. You got this fair value gap right here. So market came down, took sell side, came back up into this fair value gap, tapped into it. Okay, respected it. So now I'm going to start targeting liquidity points that are below, right? So
Yeah.
you got, if you entered here, you could target, this one could be your first target. So that was the previous low we were at before this high was made. So that could be your first partial, right? And then if the market wants to continue further down, well, then we want to see it come back up into a fair value gap, respect it. He's recording it. Dang, that's been a long recording. So we want to see the market come back up and respect a fair value gap it created. Now, not every time will the market create a fair value gap, but you do have this bearish inversion right here. Market came back up into it, respected it. Not only that, you got this volume imbalance that it tapped into because it left it behind. So, where is it? There you go. The market, volume imbalances are a very powerful thing. As you can see, the market left this volume imbalance behind, came all the way down to here, only to come back up just to tap into it because that was an inefficiency that the market left behind. So the market came up, respected this bearish inversion, tapped into this volume imbalance, then to continue to the downside following that. So
yeah, there's multiple confluences right there. You got the wick, you got the fair value gap, and you got the volume imbalance, which is like,
yep.
and it didn't close over the 50% thing. So that even shows you like that was a great entry.
And typically with a volume imbalance, if the market closes through a volume imbalance, typically it's going to continue the other direction that it closes through. If it doesn't close through it, typically it's going to continue the opposite direction.
Writing that one down.
And then, so then this could be your next target. So say you missed this entrance here, then your next target could have been, your next entrance could have been here. And I mean, even if you wouldn't even have had to wait. Like literally, you could have entered here. This could have been an entrance right here on this candle. Because the market did come down and take these lows on this candle. Then the market went back up right to here, created this fair value gap. Market came back down, took this low. Very next candle, the market came back up, tapped into this fair value gap and respected it. Boom, entrance, target here, target down to here. So you have this entrance, you have this entrance, you have this entrance. So there's there's 3 opportunities right there for you to have taken a trade just on this on this way down. Now, I'm going to see.
Out of those 3, League, which one would have been your one trade for the day?
That's at 3 p.m. I'm not even on
all
the computer
3.
at that point.
All
Gotcha.
3 of them.
Right.
Now, I mean, if I was on the computer and I saw this playing out, I probably would have ended up. So, I mean, you couldn't have taken this trade yet, right? Because the market never came back and tapped into it until over here. So this you couldn't have initially taken any of this right here. Now, your second opportunity, if you were quick enough to catch it, would have been this one right here. Now, the beautiful thing is what's the high? 453.75, 453.75. It created 2 highs right here, two of the same highs. And the market, like I said, loves equal highs. Now, would I use this as a major target? No, but the market is going to want to take that. It did right here. But so if I saw this, I would draw it out. And then if I saw this one, I would draw this out. If the market tapped into this, then I would have entered here.
League,
if I hadn't, huh?
You're forgetting that inverse fair value gap right there. You hear me?
I didn't even see that.
That's why I would have took the trade right there. Actually, it was 3 things. It's the fair value gap, the volume imbalance, and the inverse fair value gap.
Well,
three
then
games there.
now that I see that there, yeah, that'd have been another opportunity right there for you to take that trade. Because not only did it respect this bearish fair value gap, it also respected this inversion too and closed outside of it. And now if I missed this opportunity, I would have waited for a low to get swept to see if the market would come back up and play into here. Because I like at this point I wouldn't want to take anything in this area. Due to the fact we had all this chop and then we had more chop. So you don't really know quite. I mean, yeah, the market's going down and taking more sell side liquidity, but you don't really truly know how far back up it could come, because the market can come back up. And it did just that, because look what it left behind. It left behind a volume imbalance.
Crazy.
So the market, so you could have entered there, but it would have been a scary entry point unless you got out down here. Well, yeah, it kind of would have been, because wait, let me see this. Look at that. And this is what I say about the market. The market takes people's liquidity. I guarantee thousands of people had their stop loss right there, and the market wicked them out through this fair value gap, this inverted fair value gap, only for the trade to play out in the direction. The market, they know, the market makers and all that knows where liquidity is. Liquidity, they know where that is. Them hitting their stop loss is taking liquidity in the market. And what did it do? It wicked tiny bit through, probably knocked a lot of people out of their position, only to continue to the downside afterwards. So you have this one. So the market came down, took sell side, came back up, played into this bearish fair value gap, as well as this inversion. You had this opportunity to take this trade, as long as you set your stop loss a little bit higher. Otherwise, you've been tapped out right there. Now, the market did leave behind this inversion, this volume imbalance. And what did it do? It came back up to tap into it before continuing to the downside. Now, what happened again? The market created another volume imbalance to only take sell side, come back up, tap into it, only to continue down further. Volume imbalances are a very powerful thing. The market will come back eventually for them. I mean, like if you look at this right here, let's go to the daily right now. What do you see here?
That's a big old gap.
That is a big old one. That is a big old volume imbalance. And the market going to want to close that. It's going to. But when is the question at hand. So
Oh yeah, guys. I'm just gonna let y'all know I gotta go. But
you actually gonna go this time?
Yeah, I gotta go. It's 12 o'clock. I gotta wake up
you
early.
you good, my man. It's about to be 1 o'clock here, so I'm probably gonna give it just a little bit longer before I hop off.
Yes, sir. It was nice talking to all y'all. For real, for real. I mean,
Damn.
hopefully get this next weekend, man.
Yeah, you have a blessed night, man.
All right.
Well,
man.
hey, embodiment, you need to let me know your schedule so we can figure out a one-on-one.
Gotcha. I'll let you know tonight.
Okay.
Thank
so yeah,
you,
we got you have a blessed night, dude.
You too.
So yeah, we got this volume imbalance here that the market's just playing around with. And you can see it's just dancing through it. Yeah, it's closing through it on the 1 minute, but we need to see it close through on the daily. And typically with a volume imbalance, from what I was taught, is it needs to be ran through one way and then be ran through the other way for it to be considered technically invalid at that point. But it can still get used for, I think it was up to 90 days, or it's 60 or 90 days that it could still be used, but it won't be like as strong at that point. Same with fair value gaps. Like the market can still, like, say the market closes through a fair value gap, the market can still come back and then use that same fair value gap, that even though it closed through it, still come back and still use it again. Now, at that point, would it be one I wanted to use? Not really. It wouldn't be something I'd be as focused on using. Because like even with like right here, like this isn't the best example, but like you can see we originally had a bullish fair value gap, but it closed through it. Initially, it started to play against it, but then it went back up and then came down, and it kind of used it to its advantage. Now, I mean, of course, you got this bullish fair value gap that's right here, and then also you got this order block that's right here that probably was the main factor to why the market continued to push higher right there. But I mean, this is just another example of how the market could still use it. It's not the best example though. So yeah, so you have this entrance here. Well, you have this entrance right here. Then you have this second opportunity here, a third opportunity here. And then you're targeting the lows as you go down. Now, I mean, you could go as far as to this one right here. So I think these are equal lows. 416. Yeah, so you have two equal lows that are right here. And the market wiped them right before market closed for the day. And then the market tapped into all these volume imbalances that were left behind right here too. And the only one it didn't tap into is this one down here, which I'd be intrigued to see if it does that Monday, because we're still kind of in a bullish downtrend, but not fully because we did sweep this high right before market closed. But I mean, we'll have to see how the open happens come Monday. Questions?
I don't have any more questions. Just more so just appreciation. Just thank you for taking your time to showing us.
Yeah.
I am gonna hop off though, because
yeah, I'm tired of shit right now.
Yeah.
I just realized it's 1 a.m. Wait, that means it's 7 a.m. where Descendant is right now.
Yeah, 7 a.m.
This man woke up at 4 o'clock to hop on this call. That is motivation right there for me.
Oh yeah.
Like, what the hell am I doing with my life that I'm not waking up at 4 a.m. to do this kind of stuff?
I appreciate what you're doing. I appreciate what you're doing.
Hey, no, I just want to help people, man, at the end of the day. Like, if you succeed, that's all that matters to me. I just want to see people do good.
Thank you a lot. Thank you a lot, man.
Yeah. As long as you retain it and put it to use and it works for you, then I did my job.
I'm going to be practicing how to see these fair value gaps today after check, After coming, I'll just do that and then,
And send me pictures of fair value gaps you draw just to make sure they're right. And then if you have questions, if you have questions, feel free to reach out to me, man. You're not bothering me.
Okay. Thank you. I'll do that.
Okay. Well, if all of you guys are good for the remainder of the night, then I'm gonna head on to bed.
Yeah, likewise. All right, man. I'll see you Monday.
I will see you Monday, brother. You have a blessed night.
So when can we schedule the one-on-one call?
Whenever you want to, bro.
I'm free anytime. We can even do it tomorrow.
Okay. Intrigued. Is it different leveraging, or like what's different about it?
It's different leveraging. The leveraging is it's cleaner. The reason why I'm using this broker is to collect all my funded account profits. So I'm just gonna build this, and then I created this account, verify it, and have it here just to use. Because the reason why I'm using this account is to trade to scale like 100K to $1 million. So this is the platform I will be using on this pair because of the spreads. But we can do it on this NQ, which is this one. We can do it on this. But this one gives me
every tick value is 0.1 cents. Okay.
It's more. You would have to use it to understand what I'm saying.
No, I was interested. I was like trying to. I love learning stuff, so seeing that intrigued me because I like seeing new things and learning new things. I didn't know there was one that did that.
Understand. So we're still in an extreme uptrend.
Mm-hmm.
And it's gonna be very hard for the trade to change, because we have our protected lows here, and we have our extreme protected lows here.
Mm-hmm.
And what can happen here? So I would be targeting sell side once it breaks, once I see it push this level, targeting this order block here.
Yeah.
Reason is because, or I would still be biased if I see price respecting this order block. My target will be this level if it's unmitigated, or if price hasn't swept liquidity.
Mm-hmm.
So let's say if I'm an ICT, it's weird in my opinion, because let's say price is trying to push for this level. And then if we see prices closing out each sell side fair value gap, it's showing us it's not going down.
Mm-hmm.
And it took me a while to understand that the reason why, let's say where price is printing sell sides here. A lot of sell side ICT traders will take the sells targeting these lows, correct?
Yeah.
So if we're thinking about because it's printing and it's breaking lows, it's breaking these, which some may consider this a break of structure, which is it's not. But what's happening? And this is what messing me up, League. You're following me?
Yeah.
When I do understand my bias, and then price came up and wiggle and do its thing and dance, it's like I change my narrative and I say, fuck, I'm fucking bearish, or it's the ICT traders are gonna take the sell off and shift the entire thing without realizing the trade can only be shifted by either a ban or a news. So even if I see these, I should still keep my bias and know that price is gonna want to sweat this liquidity here before taking out this high, because we got a very price came up and gave me a bullish order block right here, a very strong order block, which is this one. What is considered a strong order block? A block that is tapped into a fair value gap.
Yep.
I know you know that part, my guy, because so I see that this is a very strong order block because it taps into this level and give me a huge rejection. Price came back, give me a small tap and went up, took out buy side liquidity. So I know that the next time price came and swept this liquidity, it's going to take out this one. So what happened? When I see price keep on printing these, and it's not, and buyers are not pushing to come fill back these, then go back and then drop, fill, drop, fill, drop, fill. You understand what up?
Yeah.
You're following me, right?
Yeah.
It's like when I see this, it's like my bias change. And I lost focus on this. I lost focus on this liquidity here. And my entry would be something like this. Stop loss below this fair value gap here. Targeting this high. I normally go for a 1 to 2. Something like this.
Yeah.
But when I see something like this happens, my narrative changed. And then I jumped in with the following these FVG traders. Stop loss above there. targeting this level. And that's what happens. It's like I missed out on this important order block right here. This one. It's like I don't. It's this, and this is the reason why I kept on losing. And that's my problem. That's my biggest problem now.
I feel that.
That's the challenge I am facing. It's
So
like
have you ever? What were you saying?
It's like I confirm my bias, and then seeing these because I traded ICT for over, I think it's over 8 months. I traded ICT, so it's like it sticks. it's like it's a magnet, bro. And it's affecting me. It now when I trade to SMC and I wait for this this level that breaks structure, I know that here is an institution. So I'll wait for this demand or supply level to came back. My entry would be something like this. For example, right here. So it will be right something like here. Stop loss below here, targeting this side. For example.
Mm-hmm.
Because I know that there's an institution that took this trade, and I will trade off of the institution. But sometimes price can run through this level. But what I learned is that I can wait on confirmation. Wait for price came, give me a shift, give me a shift of structure or a change of character. Then I take the trade off of this level, target below this level, targeting a 1 to 2, for example. But which is not the right way. Instead of putting it here on this order block, bullish order block, targeting a 1 to 2. But when I see something like this happens, my bias has changed.
Mm-hmm.
And I'm over trading, bro. I'm over trading a lot. It's like I am obsessed.
I know that feeling.
Yeah, it's like I just want to be around the chart. I just want to be involved.
Yeah.
Like every move I see, I want to get involved, and I'm losing.
Yeah,
And
that's why I
that's the
limit
reason.
that's why I limit myself to be done by 10 o'clock.
Oh, that's not bad, bro. Never thought of that. I'm listening.
Well, so like when I say 10 o'clock, I'm done by like 10:15 because you have the 10 o'clock reversal. But like if I haven't caught something by then I'll come back tomorrow. You know, I don't want to spend more time on the computer than I have in my day to enjoy it, you know. We do this so we can live life how we want to. You're not getting to live life how you want to if we stuck on the computer all day having to try to catch every trade.
Oh, bro. Okay, so
Like
I'm listening.
So I had a group chat with some friends that I knew for a long time, and
Yeah.
probably like 2 years they were my friends on Discord. But their biggest problem was they spent their entire day from 9:30, really from like 7 in the morning to 4 o'clock in the afternoon.
Until market close.
Yeah,
That's my
trading, and I was just like, I never understood it because the whole time I was in there, they never passed any evaluations, and they would always, they would always give their money back to the market, and they're over there saying, talking back and forth, saying I'm in longs or I'm in shorts. I'm like, well, why are you in longs? Why are you in shorts? And they would never have a reason as to why. And so they're just blindlessly trading, and then as well as just over trading. And like I would try to talk to them and stuff like that because they'd always be like, where'd you go? I'm like, it's 10:30, I'm done. Like I don't want to be on the computer all day. Like, I don't know. I know that feeling, but the cool thing is, bro, if you can discipline yourself to get off at a certain time every day, regardless
Yeah.
if you catch a trade or don't catch a trade, like if you
Yeah.
can make yourself get off that computer and just go enjoy your day, go touch some grass, like that will play into your trades. Like having that discipline to say no will play into your trades because you will be able to discipline yourself to wait for trades, wait for good setups, wait for your strategy to work, like wait for your strategy to set itself up. You'll have a lot more control over yourself inside and when you're in trades and when you're out of trades.
Yeah.
And that took me a long time, bro. It took me over 2 years to get to that point.
Oh damn. I'm
Or
I'm currently at around 13 months.
yeah.
Yeah,
I'm
13
at
months into trading. Let me
I'm at
show you how
almost
much.
5 years now.
Damn, that's bro. You're goated. I have blown over 100 accounts.
I
Haven't.
mean, I have too.
Yeah,
I,
it's
I
it's
think my first when I first learned about prop firms, and
yeah.
when I went and did my taxes that year, I did my taxes, and I was trying to write off my prop firms that I blew for all my taxes. And
Yeah.
I sat down with H&R Block, and we're going through like my losses, and I added up. I went onto my Truist account and I added up everything I spent for Apex,
Yeah.
Tradeify, Take Profit. My first 6 months in trading, I lost $17,000
Oh, damn.
to prop firms.
Oh wow, that's bad, bro.
I spent 17 grand on prop firms, bro, and didn't have a single dollar to show for it. No. I'm sorry. I had one payout. I made $400.
You gotta pay out. That's
I made $400 and then lost the account on the very next trade.
damn. It happens. It happens, bro. It happens. I haven't made it to payout as yet. I'm over around 200 accounts.
Yeah.
Yeah, I haven't made it to payout. I'm going through it's like I'm fighting my emotions.
hmm
And that's the reason that's my biggest issue now.
That
Fighting
is
emotion.
because we get in our head and then we're like, crap, I just lost this much money and I wanted to make this much money. So I need to double my size. That way I end green for the day.
You lost a lot. I mean, here in South Africa, you can't imagine how much you've lost. You know,
Really?
that's like 100 and something thousand, 400 to 300 and something thousand. I never even touched that money.
You'll
Yeah.
make it back. The thing is you just got to keep showing up. That was the thing with me. You keep showing up, man, and you will win. It just takes time. That's why only 5% of traders make it.
Yeah, I believe. But I'll show up every day.
That's it. Just you got to do what no one else is willing to do, and that's the hardest part because we want the human mind. We want things easy. We don't want to have to really work for it. We don't like complicated stuff, and sometimes and if for you to want success in an industry where you can make $1,000 in 10 seconds, why other people have to work 2 weeks to make $1,000 like that's and this is something I tell people too, a lot of traders that I'm teaching. Think about this, and I don't know what y'all because I know you said you're Jamaican, and then I also know descendant you're in South Africa. I don't know what y'all's minimum wage is there, but a lot of people here in Georgia, like we typically make around $15 to $20 an hour. And so I tell a lot of traders, I'm like, bro, you're over there in a losing trade and you won't close your trade out at positive 10 or positive 20 or positive $30. that you just made. You made $30 in what, 20 seconds maybe, or 10 seconds. You won't close that trade out, but yet you will go and work an entire hour at a company for $30, for $20, for $10 an hour.
I never looked at it that way.
Like, you got to think about that. Some people will work an entire hour to make $15, but they won't close out a losing trade at positive 15 that they made in 1 to 2 minutes. Even though it didn't hit their target, they let themselves go into the negative and they lose $400 because they weren't happy with 15. Yet they'll spend a whole hour working to make $15, and you're not happy that you made $15 in 20 seconds. Like, and so like we got to remind ourselves, because like we can make $300, $500 in a few minutes. Why some people have to work a whole week to make that. And like that's where a lot of discipline comes in, and being okay with the small things. Like I had to discipline myself to be able to my first 6 months, I made myself disciplined enough to where I was okay to walk away with $250 or $500. My target every day was $200 to $500. And I did that consistently for 6 months straight. And that was on an Apex account. And I walked away with that Apex account taking home $53,000 on my sixth payout. And I did that. And so like once I was capable of doing that and being consistent in that and being okay with that, well, then I started going for 500 to 1,000. And then once I did that consistently for a few months, well, then I started to upscale, and then I started going for 3 to 4,000 a day. But at that point I had multiple accounts. So I'm not having to take risky trades, because I'm still taking small trades, but I have more accounts, so it leverages it. And so that's how I've gotten to this point. It's just the discipline. Like it's a hard thing. It's a hard thing to get past your mindset.
You're saying it's a discipline to be able to grow the account and not. Correct?
You said what? What were you saying? You kind of
you're saying it's a discipline is just patience on growing the account, and not or patient on and trying to conserve on or preserve profit.
You're building a business, so you want to protect your profit. You want to have good risk management at the same time. So you want to protect your money, because we're growing a business, and a business takes time to grow. We got to start small and to grow into the big things. Think about Amazon. Amazon started off in a garage, probably making barely anything a day, maybe a few bucks or a few $100 a day, to where now Amazon is making over $1 million every second of the day. But that took years to get to that point, and they had to grow their capital. They had to protect their capital. They had to have discipline. They had to make the right decisions. They had to have good risk management, stuff like that. Amazon Amazon produces about $1 million every second.
Damn. And to reach that state, you have to have a lot of discipline.
You do, and you have to, and because like you're growing a business, and so you gotta protect your capital. You gotta know when to walk away. You gotta be okay taking the small things, because the small trades will lead into the big ones.
Yeah, I understand.
Because like say like what I tell people who are starting off on a funded account, like trade one micro. Let's say you have a 50K account and you're funded and you're just going. So if you have below $1,500 in profit, you shouldn't be trading more than 2 micros. If you have $1,500 to $2,000 in profit, you can trade up to 3 micros. And once you get above $2,000 in profit, then you can trade 5 micros.
Yeah.
if you're at a 100K account below 1500, three micros, 1500 to 2000, 4 micros, 2000 to 3000, 5 micros. Above 3000, then you can trade up to 10 micros.
You know, I was about to ask you why you guys like Di Lorenzo and you would rather use the 150K
The
instead of
150 so the 150K gives you more drawdown. It gives you more room for error. So if you make a mistake on a 150K account, you have $4,500 to make a mistake. To whereas if you have a 50K account, you have $2,000. that's half. That's less than half of 4,500. You know, so you make one mistake on a 50K account, you're in the hole, and it's gonna be hard to climb out of. You know.
So it's not difficult to try to make. Let me see. It's not difficult trying to make a 9,000 in profit using only 4,005.
I can pass a. So I passed 3 150K accounts this week, and in 3 days. And so I did 5 minis each time, taking partials along the way. And I sat there and I'd wait for an A+ setup. And then I'd enter and I would take partials along the way, shooting for 50 to 100 handles.
Understand.
And so, but I've been doing this for a long time at this point. So like I kind of have more understanding of it compared to someone that's new to learning ICT, you know. So like it's and the other thing for me is this is like I rather get in an eval and be a little bit more risky with it. So I spend less time on it and I can get to making money sooner. So I'll be more risky on an evaluation. But once I get a pro account or a funded account, then I will stick to my rules. Because I don't want to spend a whole 2 weeks on an evaluation only to screw up one day and then blow the account, and then I just wasted 2 weeks. I rather spend 1 or 2 days trying to pass it in as little as trades as possible. And if I blow it, then I can just reset it, and I only spent a day or 2 on it. And so, but typically I pass an evaluation in 2 to 3 days on a 150K.
So let's say you got a 25K account to trade with now.
Okay.
Can it would be more difficult for you, or it's the same result?
What is that? The drawdown's what, 1,500, I think.
1,500, yeah.
It wouldn't be as difficult because I'm pretty sure you can only do 3 minis. So I would just, like I said, I just wait for the right setup because I typically trade at most 3 minis if I'm on a funded. But first I build my account up 10 grand in buffer before I will trade minis. I start off on micros when I go funded, and then I swap to minis once I have 10 grand in a buffer.
Yeah. Understand. That's not bad.
Yeah, it pays out.
So here's my plan going forward this month, because I've lost over 100 accounts. Fail over in pro accounts. I have failed 1, 2, 3. Let me share my screen so you see what I'm talking about. Change screen. Share. Okay, so this was the one I failed last week, and look, this is my issue. This was scalping. You see these numbers?
Yeah.
And what I was doing was I was risking $200. I was risking 500 to make 200.
Well, that's not good risk management.
No, but the thing is, that strategy must only use once on an A plus setup, because even if it's going to reverse, it's going to hit that 200 before it reverse. So what happens here? After I got my first 200 hit, and I took another trade when I should done for the day. Then I see I went down 300 in my drawdown. Then I closed out. Then I try to recover. Then I'm down 200. Then I close out instead of letting the trade play out. Instead of having, like, my daily loss limit is 500. So this is the one that I'm going for now. This is the one that I'm focusing on. Look, I've never passed any of them. It's just the stress is I would say
It's annoying.
It's annoying. So when you look inside of these, it's just it's annoying, bro. The failure is a lot. So this is the one I took. I was in drawdown. So you're saying that I should not waste a lot of time on these. I should just try to get them off my hands as fast as possible, so I can move over to pro. Correct?
I mean, if you're struggling passing the evals, though, you're gonna struggle to pass if you're struggling to pass the profit target, which is the not the drawdown, but if you're struggling to get past the profit target, you're gonna struggle to get out of the drawdown just the same when you go pro. So I mean, you're gonna want to figure out where you're going wrong before you get a pro account, because otherwise you're gonna just continue to make the same mistakes once you get a pro account. If you're not getting it already, if you're not doing it correctly in the evaluations.
That's the reason why I'm going bankrupt, because I'm not doing it correctly. And what happened is, once I pass this and I'm over here. Once I'm in a trade, my heart's pumping. My heart is all over the place. But it's like, once I execute a trade here, my bias can be correct. It's like, once I let me change it. Change screen. It's like, once I execute a trade here, and my bias is indeed correct, for example, and my stop loss is somewhere. My stop loss is somewhere around here, for example, and I'm targeting these lows. It's like, once I see this, I pull out of the trade. I don't got the balls to make it hit this. Stop loss. When I'm on the PA, when I'm on the PA, it's like my heart is pumping. It's like I'm trembling. I'm going nervous. And I understand why, because I try to diagnose my problems. And the reason why is because in Jamaica, you hear me, bro?
Yeah, I hear you.
In Jamaica, let me show you something. Let me share back the screen that I was on. Where it is. I'm trying to find the screen. Okay, let me just show you. In Jamaica, one of those accounts, which is $100 for a reset, correct?
Yeah.
is 1 week's pay. So I have to work 1 entire week to purchase one of those accounts.
Bothers me for you.
So it's like
that's wild.
So it's like I'm saying, oh my God, this is a lot of money for me here.
You need to get the fuck to the USA. You'll make 180 in a day.
Bro. So it's like I'm saying, I need
80 pay.
Huh?
I mean, in the US, I hear they say you make 100 or 80 in a day.
Yeah, typically like the typical pay is like 15 to like 25 an hour.
Me and digital what they're saying. That's like a week's pay, man.
Yeah.
Because you know a typical police officer he earns like $780 per month.
I don't understand. Can you repeat what you just said?
I mean, like, man, you have the similar issue when it comes to the value of money.
Yeah.
So
The thing is that
you know.
The thing is that I do have US source of income, but because I have a business that generates US source of income, I allocate all that money to trading. And when I change from ICT to SMC, I went on a huge losing streak, and then I pivot all my business income towards trading, and it caused me to go bankrupt. But in Jamaica, one account reset, that's 1 week's pay in Jamaica. But the issue here, huh?
You need to get some Apex accounts. Apex doing 90% off right now.
Oh my God! Let me show you. Let me show you my Apex dramas. I have over 100, bro. I have failed Apex so many times. It's on
Apex. I hate Apex. They can kiss my ass.
Yeah, I rather stick with. They have like some secret, like I think they have removed it, the DCA, dollar cost averaging, that can let you fail. They hold your money for 7 days, even if you're, and then they find issues to
they'll find reasons to deny you.
To deny it. Even if you're trading properly, they find reason to deny you. So it's best to stick with prop firms that offers same day or next day payout.
Yeah.
Yeah. So this is the reason why I stick with.
Like Apex, I had an 8-day trading session where I didn't lose a single trade. My drawdown wasn't more than like $400.
Yeah.
I made like $6,000 that week, 5 or 6 grand in those 8 days. And I didn't break the consistency rule. I didn't break a single rule. And they denied my payout. And I messaged them because on their website it says they will tell you why they deny your payout because they provide full transparency. They never would respond to that email. And so to this day, I still don't know why they denied it.
Oh, and you said you didn't do any DCA or
I had to trade another 8 days to get the payout.
Well, you did got the payout.
Yeah, that account's closed. I got to my 6th payout on it, and I wiped that account clean. And then I never traded it again.
Yeah,
understand. I don't know. My goal is to have around 20 Apex, and since I understand how they work, they would rather you have 20 accounts just for. They offer the 20 account just for the showboat. But they would rather you trade small. Let's say you have a 20 accounts and you only go for $100 a day. And then once payout cycle comes, you're requesting a 10K or a 5K payout, knowing that you have over 3K in profit on the account. Let's say you do something like that. I'm talking across the board. Across those 20 accounts, you have 3K on each account.
Yeah.
But you withdraw $500 from each account. They're gonna do the payout. They're gonna send it to you. If you're an influencer, you can withdraw everything and they're gonna send it. But if you're not an influencer, they don't want to see you're withdrawing the max amount of money that is on the account, which is 2K per account, which is the max withdrawal every 7 days, I think. That's what they do.
2,750
is the max.
Yeah.
On the 150K or on the 50K?
150K.
Oh. So you want to give them a try?
Me?
Yeah.
No, I did. I've had, like I said, I had an account with Apex.
Yeah.
And I made $53,000 with them. And on my last payout, I took out 37 grand.
Yeah.
And then I haven't traded the account since because I got tired of dealing with them.
Understand. You know, to be honest, if I was in your shoes, you know what I would have done, or what I would continue to do, because it wouldn't be affecting me. I would just add them as my copy trade option. So my trades also copy over to them. They can pay me if they want to pay me. It's okay.
I tried. Yeah, I tried to. So what happened was, they wanted to send me to a live account.
Yeah.
And they asked for videos and photos of my trades, and then an explanation of why I took each trade. And I sent that to them. But when they do that, that puts your account in a what's it called? It puts your account under review. And when your account's under review, you can't buy more evaluations. And so since then, it's been 3 or 4 months. I have not heard back from them on anything. I've sent them a few emails asking them, hey, have y'all reviewed my trades, my videos, because I'm trying to buy more evaluations and I can't because my account's under review. Can y'all lift that that ban, basically? And they have never responded, and I can't buy more accounts until they take my account off review.
Because you're a good trader, my boy. And they see that what you sent, it's golden. You're not gonna make them make money. You're gonna make them lose money.
Yep. They don't want me. I was gonna buy 20 accounts. I was gonna run them dry.
What you should have done is just show them something that is not. This is really good, because when it happens to me and they ask me to send a video of my execution, I know what I'm going to do.
What?
I'm gonna give an incorrect bias, because they're actually good traders. Yeah. So if I'm gonna send something good to them, you see how I explain something to you on the chart, and you as a good trader, you can identify that I'm not shit. So they're gonna know if I'm talking bullshit or if I'm talking facts. So if they said I should execute a trade and explain the reason why I execute this trade, and I said, okay, I saw that we got a liquidity grab here. I saw that we have liquidity here. That the price. Let's say I'm recording this video to them, and I said we got liquidity here, and my target is this high, and they see me do something like this. For example, they see me do something like, I'm gonna do a sell side targeting this high. Stop loss here, stop loss below this level. Take profit here. And then they see this trade play out. Bro, bro, they're gonna they're gonna put you under review, my boy.
Yeah. Yeah, they're gonna
But
be like, you can't, we don't want you around us.
but to be honest with you, it's like being in Jamaica, I got to learn a lot of stuff. When it's easy for me to just create a different account, change my VPN. I can use my same name and just route my IP in US.
Mm-hmm.
My same name, same everything, and just change. That's the benefit of having certain skills in computer. So
Yeah.
even if Apex change my or Apex restrict my account, for example, what I have learned is that if they restrict my account, depends on I think um Substep no longer support Jamaicans. And you trade with Substep?
I was going to until I stopped doing Trade Evade.
Oh, you're a trader bait trader.
Yeah, I'm Trading View.
Oh, you're obsessed with trader bait. It's smooth. I like it. But I'm a diehard ninja trader. Reason being, I can execute a lot of copy trading from Ninja Trader across other multiple computers.
Oh well, I use Trading View.
Oh, you use a copy trader in Trading View?
Yeah, so I use Trading View to execute my trades, and my Trade Evade's attached to Trading View. But
Yeah.
Ninja Trader owns Trade Evade, so I have my copy trader on Ninja Trader, and then
Oh,
I'm signed into my Trade Evade accounts on Ninja Trader, and then I
that's
sign
not
into my
bad.
Trade Evade account on Trading View, and so it copies it all
Oh,
for me to there.
oh, so you use Replicanto.
I use affordable indicators.
Oh, I had no idea what's that one is
I
called.
pay I paid $150 for it. Um, and I don't have to pay anything. I don't have to pay a monthly fee or anything. It was just $150, and I can trade as many accounts as I want on it.
Oh, it's unlimited.
Yeah, it's pretty great.
That's not bad.
And,
Affordable.
yeah, affordableindicators.com, and they have so many other tools on there too, man. It's honestly pretty crazy the amount of stuff that they have on there that you can buy.
Oh, that's
To
cool.
and it all attaches to Ninja Trader.
Affordable. Let me check to see what they have on it. Oh, I know this proffer. I know this. Yeah, I think I remember these guys. And you're saying that it's unlimited.
Yeah.
Damn.
Because I've had like 50. I don't know if it's unlimited, but I've had up to 15 accounts um on there at one time, and it didn't have an issue.
Oh, understand. Understand. So let's see how am I gonna go up. So in your experience, what would you recommend, knowing that it's hard? You would say it's when I pass this eval, what would you recommend for my PA?
For your what?
What would you recommend for my PA when I'm trading on the PA account?
Like how
What
many
would you suggest?
contracts?
Yeah, what would you suggest?
Is it a 50K?
It's a 25K. Let me show you. Change. Where is it? Change stream.
I think isn't the most you can buy is 3?
Yeah, I think so. I think
Click on it.
the max.
Yeah, 3. So I mean, if you're below $1,500 in profit, I would do 1. If you're above 1,500 in profit, then 2. And then once you're above 3,000, then I would do 3 lots.
Wait, you will you will use up the entire 3 contracts?
When you're above a certain point, yeah. I mean,
Damn.
once you, but as long as you trust yourself in your trades. If you don't trust yourself in your trades, then I'd stick to 1 for a long time, for as long as you need.
Facts, I agree. Because sometimes I'll be double clicking, and instead of I execute 1 contract, I execute 2.
Yeah.
And that's not good because I'm listening.
No, you're good. Continue.
And I said that's not good because if you hit 4 contracts, you break a rule. Correct?
Yeah. So it won't let you place more than 3. I've tried. I've accidentally I accidentally one day I forgot because I have a 75K account attached to my other 150. So I have 4 150K accounts. I have one 75K account. I got the 75K account for free. So I was just like, fuck it, let's do it.
And you tried it on Ninja Trader?
And it wasn't on Ninja Trader, but it was on TradingView. And Ninja Trader, since I was running the copy trader through Ninja Trader popped up. It popped up a block ad saying that I can't trade more than so and so accounts on a 75K account.
Oh.
And the trade didn't go through, while all the other trades on my other accounts still went through.
Understand.
So yeah, I think it blocks it if you try to do more than you're allowed to.
Oh, understand. So on the Ninja Trader, the features that I like about the something.
Mm-hmm.
Let me boot up my Ninja Trader and show you a feature that I like.
Jesus, you can pay for an order flow indicator on here for $1,000.
Yeah. That's not bad.
That's ridiculous. What do you mean?
Bro, you see, this is the reason why I tell myself, I am become profitable in trading. I'm gonna go for the most expensive indicators just to give me a more view. Then again, I have a lot of stuff on my chart. Let me share it so you can see what I'm talking about.
I don't use any indicators because they run behind. They lag behind live PA by a few seconds.
Oh, didn't know that. Change screen.
Okay. Yeah, indicators won't show exact live data. They lag behind a little bit.
Yeah, let me show you the feature.
And when I'm saying that, it's primarily like EMAs. EMAs lag behind.
Yeah. Okay. Let me try to show you something. This is the feature on the. Let me know if you're seeing it.
Yeah, I see it.
On Ripple Cancel. This is the main reason why I try my best to master. Where is it?
How the heck? Oh wait, no, you still have the simulation on there. I was about to say, how'd you get rid of the simulation account? It won't let me get rid of that bitch.
Annoying, don't it?
It annoys me.
Where is it? I think I deleted it because I don't see it here. Hold up. Yep, it seems I deleted Ripple Cancel. I was gonna show you a feature that actually it's like a key where It's like a key that I didn't know it's not on here.
Yeah.
It's like a key where each trade I execute on my Ninja Trader
Mm-hmm.
also execute on your in the Ninja Trader just by inputting that my key or inputting your key on my device on my Ninja Trader. It's so that's one of the main reasons I I I stick with it's the same as the copy trader, like the trade sinker.
Oh. Yeah, I
It's
was
the
gonna.
same as it.
So my copy trader. Let me pull it up. Here, I'll share my screen.
Yeah, let me close this.
There we go. So you click on this indicators. So what I'll do is I will make this one
This
the
is
master.
this is which this is Ninja Trader.
Yeah. And then I will make these the slave accounts, and then I lock it and I turn it on. Now, if I take a trade from this account, it'll put it onto all of these.
And it copies over the same values, or it's just a
Yeah.
tick off.
It's maybe like $50 to $200 sometimes, or it's spot on. I think it really just depends on my internet access at that very second.
Understand.